According to Iranian officials cited by CNN, China is part of Iran's political balancing amid the conflict. Trump says 100% we get Iran's nuclear dust. So Trump speaking in a radio interview with Sid Rosenberg. One minute remaining for the market on open imbalance. Ten seconds. Trump says China's strong, but we're stronger than China militarily. Market on open imbalance. S&P 500 buy side 222 million, Nasdaq 100 buy side 75 million, Dow 30 buy side 5 million, Mag 7 buy side 10 million. The Philadelphia Semiconductor Index drops 3%. Trump says Iran is just a question of time. And Trump on Iran says we don't have to rush anything. And Trump reiterates Iran can't have nuclear weapon. Trump says, I think the meeting with President Xi is going to be good. Trump says have to do tariffs a different way, less efficient. And Trump on tariffs says I get to charge more. So again, Trump on tariffs says I get to charge more. Trump says ships are coming to Texas and Louisiana to load up with oil. Nvidia shares hit record high, last up 1.8%. Trump on tariffs says we just have to do them in a more complex way. Maersk says they are still avoiding transit through the Strait of Hormuz. Secretary Hegseth says Trump on the cusp of China trip and I'll be with him. On to the Wall Street Journal, Iran expands definition of the Strait of Hormuz. Some more further info into this article from the Wall Street Journal. Iran said it has significantly expanded its definition of the Strait of Hormuz and now considers the waterway to encompass a much larger area than before the war. An official with the Islamic Revolutionary Guards Corps Naval Forces said Iran would not allow any kind of encroachment upon its waters and interests. The Nasdaq 100 extends decline to 1%. The S&P 500 extends drop to 0.5%. According to a poll, US 10-year Treasury yield to decrease to 4.3% in 3 months, 4.28% in 6 months, and 4.26% in a year, versus 4.26%, 4.26%, and 4.25%, respectively, in the April poll. According to Interfax, Russia cuts 2026 oil export forecast to 237 million tons. Copper hits $14,000 a ton on LME, nearing all-time high. Over 100 UK MPs sign a statement backing Prime Minister Starmer. US stocks extend fall, the Nasdaq down 1%. Iran International saying Abbas Gharu, a member of Parliament National Security Commission for Iran, said that the United States has two demands that are a matter of honor for the Islamic Republic and cannot accept them. First, the permanent cessation of enrichment, and second, handing over enriched uranium to the United States. 11 a.m. Eastern Time, we expect the New York Fed quarterly report on household debt and credit. And furthermore, at 11 a.m., we're expecting a Trump print interview, so expecting comments there. So a reminder in 5 minutes' time, expecting the New York Fed quarterly report on household debt and credit.
That's clean. Clean, 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 clean. Let's go here. Hold on here. Oh. Look at that.
According to the Wall Street Journal, ADNOC CEO says they're ready to resume exports once the Hormuz
Jesus
Strait
Christ. I'm hand wringing. I figured if I did more hand wringing, we could go lower. Hold on. Oh. I'm hand wringing here. We got to make the market go down more, and we need better reasons for it. I have at this 4 hour here is a potential buy the dip zone. As you can tell, we're not on a trend today up. We shouldn't be. Let me just show you this here. We should be waiting for. Hold on a second here. Hold on. Thanks, Gladriel. I have been drinking a lot of ice water. The ice water is like money. It's the only thing that really works for me. I appreciate that. Thanks for asking. I'm hoping that it's not too much longer here for to feel better. My throat or my voice, I'm losing my voice. Hold on, I got to go back to hand wringing. I got to try to get the market down. And we need a reason. We need someone to drop some bad news. So obviously we're not in a trend day in here. We're not going to be. We're going to, trade sideways and go down. And likely into end of month retest the April lows. And they'll have to make up some reason for it. The inflation print is not what the bears were looking for, is it? Bears are looking for, like almost like COVID, and then a big spike in inflation, and then the Fed needs to get serious. I actually saw a headline this morning from CNBC that showed gas prices at near $7, and the pumps were all red. The graphics were all red. The guy's name was something Cox, but Brian Cox or something like that. And he was like, inflation print was hot. And I was like, man, you got to get that fucking narrative no matter what, right?
The New
Like it
York
was
Fed says
up a
aggregate
point,
debt
and
obviously little changed in its first
you know
quarter.
that they want like
Report shows
they
first
want
quarter
like
total
inflation
household debt
at like
little changed
8
at $18.8 trillion
on gas.
versus fourth quarter of 2025. Student loan defaults were relatively low.
So this looks more like just hand wringing here. That's what I call this. I'm positioned. I need a print, and I better get one way or another.
8% of debt in the first quarter was in some stage.
Voice news disconnected.
The bear thesis is getting thick too. I read another thing this morning where someone was like, Trump bombed Syria in 2017, last time he met Z. You should expect Strait of Hormuz to blow up while he's meeting Z. It was pretty bad. Like reading what the bears write, I'm like, oh man. I'm like the tomes, you know. You just need the right mix of doom. And all I keep thinking to myself is, you need the economy to cooperate with that thesis, or I guess you just need the mechanical drawdown, and then you just disappear. You like throw your magic smoke bomb, and you're like, all right, I'm out of here. Crash canceled. So you just play along while it happens. In my take is like, is there something materially wrong with the economy? No. And is this the top? No. You couldn't even call it if you wanted to. It's just not here. I made some commentary on Twitter this morning where I said, did you notice how Mike Burry doesn't say bear market? He only says market crash. So he likely knows that for every monster move up, we're going to get a correction of some kind of correction to relieve velocity, and then we'll rip again and double whatever that pullback corrective move is, double it. So he can just keep calling crashes. For every upside move, he can just say, hey, we're going to crash, but he's not going to say bear market because he likely won't until we roll underneath that. Until that last corrective move, we begin rolling underneath the monthly trigger, and then he gets the out by saying, I called the top. Now I'm calling for a bear market. But they're not going to tell you that it's going to continue up along the way either. You know what I mean? They're not going to say to you it's going to crash. Oh, and it's going to come back and, let's say it goes down 20%, but it goes up 50%. They're not going to tell you that. A few guys yesterday said that. I think McGilligot made that comment yesterday. Even if we get a corrective move, you're likely going to go up 50, 60, 80%. I think McGilligot made a commentary that like the last year of the bubble, the market's like almost doubled. And I looked at it was something like that. It was insane. Like the market would like give up 30% and then throw on 50 or 60, which is very similar to what we're doing right now. So my point here, or ultimately my point here is we're rechecking Thursday and Friday lows, right? We talked about that yesterday. I want to go back and check Thursday or Friday and Thursday lows. That's what we're doing right now. I'm not looking for a crash. I just know that like seasonally May's end of month returns are low. So if you start the month in line with seasonality, which we did, we're up on the month. Come into like the 12th or something, you get a bear raid, and the bear raid should send us lower. And they can make up any excuse they want. So they notice how they didn't get it with inflation today. So I think this morning I read who came out this morning. I thought it was fucking comical, to be honest with you. It was like such a like it was very comical. Like here, I'll read it to you. Who said this? It was Goolsby. The April CPI report was worse than expected. Like, get the fuck out of here, worse than expected. We all knew we were going to get a hot print, and most people were expecting a way hotter print than expectations. He also goes on to say the worst part of April's CPI is services inflation. That is true, and I think I have told you in the past that, like, natural inflation is rearing its ugly head alongside this Strait of Hormuz inflation. Like, we are at a bottom in natural, systematic, cyclical inflation. So he's right on that point. But then he says, but this is where I thought was hilarious. He said, we have an inflation problem in this country. And I'm like, oh God, here we go. Hand wringing. I'm going to get into the hand wringing this morning. And you can't really drink the Kool-Aid, because then you come back at the end of April, or excuse me, May, and all of this is recovered, and the month ends up being down just slightly. So let me express this to you in a different way here. Hold on here. Hang tight right here. And I got two charts I want to show you guys here. Hold on. No, not that one. Does this one work? Hey, check it out, Rocket Lab. Right here. Get rid of the pivots. So let's go up and look at this one first. There's two functions here. The first function is real simple here, right? Really simple. This is a day chart for SPY. And this is Monday, right? This is Friday. And this is Thursday. This is really all you need to know. Basically, this is it. And these two in particular, Thursday, Friday of this week, we're just trying to find out, can we, pop the top up here, right? Get that new high. And then you put the weekly low in, and then we go up. Does that make sense? It's fairly easy. So this is the only operation for this week. We don't really care if we dip down underneath it. We don't care if we dip down underneath it to roll either. We don't care. We're just looking for the weekly low. That's it. That's all you want to know. It normally happens on what? Turnaround Tuesday, right? Like, we go down, we put in a high on the beginning of the week, whether that's on Sunday or on Monday, and then we trade back down and back test the early buyers for this week on Thursday or Friday of last week. Okay. And this can impart some information to us. If we look just right here, we don't need to do too much here. We just need to do this. Fairly simple. If this holds, we can go up. If this holds here, we can go up. If this breaks below, we can still go up before we reject to go down. So no matter what, there is a dip buy in here. The next thing that we're trying to do is, we know that historically, it's not sell and May go away. Historically, we have a strong start to May, then we have a weaker finish. Weaker, not weak finish, just weaker. So if we're going to give up the month, heck up the month, here's the monthly candle. Okay, this is the prior month. So, like, worst case scenario for April, you're down here testing this, you're rejecting, you're getting down here, and hopefully, not April, excuse me. Yeah. You're back testing April, but hopefully in the merry month of May. If this is a green month here, right? If that's a green month, and this is a slightly not green month, so you come down here, you blast down, you grab that low, and then you finish the month coming into June, flattish, slightly red, slightly green, and you found the dip to buy for the print in June and July, right? So you were able to get this gorgeous low, and you're able to get this beautiful high up here. And so we run up into June, we run up into the middle of July before sideways rolling, and then we take off into August, September, October, November. We're not going down there, but you get the gist, right? That you're just looking for the May low. And as long as you can catch that May low down here, you should encourage the market to go down. And hand ring the entire way. That's what you got to do. You got to hand ring the entire way. And what what the bears want, right? They want at least this, right? Take out half. At least that, right? That's what they want. I don't know if they can get this or not. I just know that I'm looking for it, like looking for the dip to buy for the week, and then looking for the dip to buy on the monthly low. If we can get that, we can. If it's down here, it's down here. But in the meantime, we have to suffer through the doom. Now, there are a couple things we want to pay attention to here today. We're going to switch back to the SPX path that I showed you yesterday. And we have our impulse move up here, right? This is also called the FOMO move up, right? You just push it all the way up here. And then we turn into distribution, consolidation for some kind of a drop lower. We don't know if that's like down here on a potential unclench. This is OPEX. This is OPEX and Vixpiration and all the other crap we got going on over here for a potential unwind. And what you really want to be paying attention to in here is, are we losing this or not? And what they want to do here, what they're looking for here is, I'm going to show you what the bears want, okay? The bears want this to fail before we get to the real unclench over here. Notice how I've got us going up here and then down to pin 7,400, right? That's a big, big bar. We also have a magnet above at 7,500 on 1, 2, and 3 dates up here. So it's like a drag on us up here. So what do the bears want to do here? The bear plan here is get us down in here, right? Pin us down early day. Unload. Right? Some supply. And they really want to put this new low in over here underneath. And the reason they want to do this is there's like a trap in here for bulls. So what you do is you break this structure, and then you wait for the failure on bulls, right? And you start putting in new lows, and you get rid of all this over here. Does it make sense? So you like low, new low, and you start this rolling process early, right? To try to get it, try to get it early, right? Because the bear like thesis goes away. Bear thesis is kind of like a time and book that they write. They go, oh, we got the inflation thing on this day. We got you got Trump and Z and Strait of Hormuz war will restart. So like they write this whole entire book, and the book, they only got so many days to get this done. So you can already see and hear just like, I got to get this done no matter what the inflation print is, right? Like faster, and get it early, because at some point it's going to start bottoming out, and we're going to start racing up into June and July. So there's a time frame on this kind of stuff. Now, if we begin turning around up here, right? You see this? Begin turning around up here. We can begin instigating some kind of a long for a print up here into Thursday and Friday. So we're just looking to see if this is actually bottom, or if they're going to plunge us down, and then we start looking for a bottom to buy up here. We can take this one too. And if we begin to sell up here on the hour and half hour cross, we can still take this trade. We can either take this trade up, or we can take it down here up here and then jump off the party time bus. And if we make a new high, we can jump back on the party time bus over here. And if they try to send us down early over here and create doom and do all the hand wringing and all that kind of stuff, and break this distribution cycle early so they can, pump their hands and say, I got one, I got a win, so be it. We can take either side of this trade or wherever this trade may be. Now, notice that we're not in trend right now. So we're not in a trend up day. So you want to be paying attention to the 12 o'clock flows that come in. And you also want to be paying attention to the close today on Tuesday. Like, do they try to pin us in here? We'll show it to you like this. This is the Thursday low. Okay. So are they trying to just like, you know, pin, right? And hopefully dump us down into this on tomorrow's open, then we're out of here. Something like that. It's not going to be down and down and down. It's not how it happens. They need more. You need more for that to happen. So you can see right now that this is becoming mechanical. There is no fear here. This is all like, I have to get this lower. So and I'll make any excuse to do it. I'll dump shares in the market, whatever I need to do. So this is not like a fear kind of a thing, is my point. It's not like, you know, it's like, you're a bear, you know, right? Elevator down before open, rejection at 9:30, elevator down until fucking 10, breath of fresh air at 12, down more. You know, that we're not doing that right now. So there's a new sheriff in town. His name is Warsh. They were even making Warsh out to be a bear yesterday, like a super hawk. They were like, he's against QE. I'm like, that motherfucker voted for QE the first time. Like, that guy is not anti-QE. I don't know why they're pushing that narrative. He doesn't have that history. He only has the history of not doing too much QE. And we're doing QE right now. We've stopped our QT operations, and we've been printing money in the background, if you don't know. So we'll just keep watching this, see if they can get back down here and see if we can buy this dip. We'll kind of draw this out here on, let's take a look at this together. Here, hold on here. We'll take a peek at it right now so you can see it. And you want to be looking, so this is Thursday right here. And you want to be looking at the Thursday buyers, the low on the, excuse me, the, hang tight here. Getting a little bit, I'm getting a little bit out of tight here. So you can kind of see it right here. So this is like the SPX. You got this one right here, right? You got one more up here. This is for like Thursday. So you can see this. This is your 750. I don't think we ever hit 750. I don't think we actually hit it before we roll. Like 745. Can do this one right here. So you can just kind of see it right here. And now the only other thing you want to pay attention to here is this one right here. This bad boy right here. That's all you're looking for, is this like little zone right here. If they come down here, they start blasting this down, right? Come right down in here, and then whamsy, right back up. Think tight here. Could even do it right in here. Yeah, they want all this over here. They want to take all this down here. This is May right here. Right in here. This is like 709, 708. And here's like 711. This is the back test of April in here. We can see that daily trigger is just racing up for it right now. Let's go back and look at this really quick. There's the weekly. This is where the back test of April is right here. We do not want to trade under 712.12. This white line right here. There's a nice, look at that gap right there, big gap. They want all this right here. You see it? They want to take that whole thing right there. There's not a lot of support in here. They want to get that. They want to get that open down here, right? Like down here, right? Bomb it. Take that candle right there. See it? And that's the intent, at least from there, from the sell side, right? You open that door, and then it's just a matter of rejecting the bulls, and then wham, we're down here. Basically, right? That's what they're looking for at minimum. You can just say that's what they're looking for, and they want it early, right? But we have problems, don't we? We have problems with OPEX, right? We're like tied into OPEX, and you get like a Trump Z, good news or whatever. We're like pinned up here at like 740, and then we come into OPEX, and there's a chance for an unwind on Vixpiration. Maybe like everybody's loaded up on calls for Nvidia, and then there's the real dump down here. So you get like the open door, and then we get sucked back up into OPEX, and then we get the expiration unclenched, and we're actually finally down here, and then we're out of here for June, right? That should be like the worst. Like that should be the worst of it. Something like this. The only other thing here would be let's say we dump this here. Let's say we don't even go up there. They fail us again. We go down there. The only thing we need to know is do we bounce higher so we can get out of here? If we're bouncing down here, we're blooding down here, we know we can't buy it. So it's just a matter of just patience and waiting without wringing your hands too much. What else we got here? This one right here. Let's go over here so you can see it. Look how doomish that is. Oh yeah, look at that. It's red. I think I had these drawn in earlier for you too. Like big red bar right there. Oh yeah, close the door cap. There's another one right there. Oh yeah. It's just more places for us to come back for. I'm only marking these red so I know every time we take one out. There's another one right there. You know, that pain down there. All kinds of pain. So come right back here to the 1 hour. Just make sure I got this right here. I think that's right. Got that one right there, and then this one right here. And this is what we should be buying, like right here. Buy this, or even this. Either one of these, if we can turn around, and either one of these, we'll start picking up some calls. Let's put this one down here, just so we have it. This one up right here. Make sure these are on, the pivots are on. I'm just going to go right here. What time we got right now? Hey, 12 o'clock. Perfect. We can check to see if buy flows come in right now. I looked at 10. I was like, I'm not seeing them. We could drag all day long down here. Just burn theta all day long today. Let's take a peek here and see if there's a way to grab this for an up move. $11.30. Move that one back over here. All right, we'll start watching this right now. We're really close here, so like really close. Hang tighter. I gotta get my account open here. I want to get some calls. Trade SPY options. How about Friday? The 15th. You guys are acting like we're in the fall or something. Hold on, I gotta get a whip and start whipping myself. Hold on. Where are we at down here? 7:20, 7:30. Jesus Christ. Fucking $6 for a goddamn in the money call for Friday. My God. You'd think there was no VIG in calls. Everybody was scared. Yeah, it's a fish. I started ordering, like, for this new show, I started ordering a bunch of props. Like, I'm like ordering props and stuff. So I was gonna have like my kids throw fish at me if I miss a call. Like, have them throw the fucking fish at me across the fucking studio. I kid you not. Oh yeah, secret FOMC. An emergency rate hike meeting tomorrow at 9 a.m. Oh, there's rumors breaking that Warsh is going to hold an emergency meeting on the 16th at 9 a.m. just before your calls are going to print. There's going to be a shadow Fed. We got to really stir up the shit pot of calls are cheap right now. Calls are dirt cheap right now. For Friday. $7.40s are $1.31. 7.45s are 42 cents. Those could be in the money Wednesday, believe it or not. Potentially. I gotta check the gamma here, but let me just make sure. Let me just see if there's still a gamma pin up there or not. The problem here is the bulls are gonna buy this shit. They're gonna buy. They don't care. You can tell them all the doom stories you want. Easy there. Hold on. Don't turn up just yet. 3 dates, 740 is the pin. 2 dates, 7425 is the pin. So it has changed slightly. 7450. So we're looking for like that 740 basically for OPEX. 740 on Friday is $1.32 at the moment. I think those will be worthless on Friday, or they won't print until the last possible moment. So you might need to go deeper in the money and hope for a little bit more down if possible. I just don't want to spend like $2 or $3 for a call that'll be worth $2 or $3 on Friday. If it's like, a few strikes in the money. We're fairly close here. We're almost at a bottom. We also have this week, the rest of this week, we have on Wednesday, we get PPI month over month. Thursday, we get retail sales. Those should come out as pretty good. Should I just start loading up now? I loaded up. I added some here. We'll take a shot at it, and we'll just have some tight stops here. If they try to drag us down into the close, which with the potential of that happening, we get dragged down in like 4 p.m. I'm gonna add some fucking calls here. We'll take a stab at it. Tomorrow at 8:30 in the morning, we get PPI. On Thursday, we get retail sales. Those should be bullish. We have the meeting, of course, with Z and Trump. So that's Wednesday and Thursday. I am not on the camp of it being a negative meeting at all. I think that there's a new shuffling of economies and governments and regimes, and there has to be some kind of like call out your partners, round your partners up, and a little bit of flexibility as these new partnerships form. And I think that if you look at this began years ago, and there's been flexibility amongst both parties. So I'm not looking for too many like negative fireworks over this meeting. And I also think it's in China's interest to get the SOH open more than it is the US's interest. And I know that's been astroturfed everywhere. That's not the case. I think these are uninformed people that don't have access to Bloomberg terminals, basically. To the information that is probably the best civilian intel you can get from the street, even though they try to tell us lies frequently, right? Hey, look at that, making money. We'll check this like we'll check above and see if these are buyers or sellers. At any rate, PPI we already know now what inflation is, so I'm not as concerned with PPI. The cat's kind of out of the bag. Retail sales on Thursday, excuse me. It seems like it would be a bullish unclench maybe to the upside. That's Thursday, 8:30 in the morning. Friday we get not too much. Let me just check a few other impacts here. We do also on the 15th have on Friday. We have potentially Warsh being confirmed at some point this week. We can't guarantee it's going to happen unless maybe it's already happened. I haven't heard about it. But we should also have Warsh coming in. So we've got Trump and Z. Then we have Warsh potentially as the new Fed chair. I'm looking for any heavy hitter news, and I don't see anything until Wednesday the 20th. That's FOMC minutes. And it's also the day after of expiration, I believe. So there's a lot of headline risk ahead. You know, like Warsh could suck the air out of the room. The 21st, we get building permits, housing starts. There's not a ton of news. Not until the 28th. A lot of headline risk coming up in the next week. Thursday, we get PCE, durable goods, GDP growth rate, personal income, personal spending. That should be a source of bearishness. And that would be like the date I would be looking for like the bear tome for doom should end around there. You should just mark that date as the potential like last chapter in bear doom. Thursday, May 28th. And you know, in between that time we get some really big earnings. And so like you repress those earnings and then you come into the 28th and they start printing all of those earnings. Like the Avgo will follow NVIDIA. I think Costco's in there too. So there's a few others. So watch this for potential turnaround here at 12. See how high we can get this. We do want to pay attention to this one right here. If you want off the party bus. This is a nice Tuesday low. I think last Tuesday we hit the low at 10 a.m. and we went vertical until Friday close, I think. Last week. Tell me if I'm wrong on that. I don't think that I am. We marked a low at, I believe, at 10 a.m. last Tuesday. Let me just check. Where is last Tuesday over here? The 5th. No, man, we just ran, didn't we? My God, we just ran. That's hilarious. So the 4th is when we went down. They marked the low at 12:09. Monday was they sold it into Monday morning, and that marked the low on. It wasn't the 4th, it was the 5th, or it wasn't the 5th, it was the 4th. And then we ran. Let's see if we do the same here. This marks the low for the week. I'll just read some of this news here. Don't care about credit card debt. It's not used like it once was. They need to redo some of these data things. Like they should redo savings, and they should redo credit cards. They need a better source of debt for consumers. Consumers love holding their debt and credit cards and paying them left into the end of the month now. You can't hear me? Is YouTube down for listening to my voice maybe? Oh, it was on your side? Okay. Maybe it was my voice. You hear how rough it is right now? Like I have damage done to my voice. See if we can get up here and get this thing started here. There's one other lowdown here too. Leave this one up so we can see it. I want to have tight stops here. I don't want to give any money back to the market. I'm trying to protect this right here. You can see it. We'll know quick. We also have VIX 9-day pretty aggressively trying to break out here. Just be aware that VIX 9-day is trying to break out. It's kind of bearish. Could be a little spot up, vol up too. We're in this like we can jump back in and forth and spot up, vol up. But just watch out for like a failure here. Start failing this, and then they start to dump it down into the end of the day. Look for some more news maybe today, something we're missing. 11:45. We have the WSDE report. We have Goolsby speaking at 1. So at 1 p.m. he's going to be a bear. So be careful at 1 p.m. Make this red. And then we also have a 10-year note auction at 1. We got to be careful of that. So I marked this at 1 p.m. See if we can get a nice little rip up here and make sure they're not trying to send us back down here into 1 p.m. And then 2 p.m. we get monthly budget statements, and then we get a crude at 4:30. Did I come on the show at the right time? You guys happier now? At least I came on the inflection point. Near perfect. Okay, let's see what happens here. We don't want to do this, do we? Bounce and then sell. So we want to watch this closely up here. Make sure you raise your stops. Hold on, I gotta hand ring my fish. Oh yeah. I'm so hand wringing right now. Oh, some bad things are ahead for us. Mike Murray is talking down the market right now. Sorry. Move that over there for you. Hold on. So scared for the market right now. Super scared. Oh God. Meanwhile, the Legion of Doom. I feel like it's the it's like Zoolander. What is that? CPI for ants? Here's the first bus stop right here. We got another bus stop right in here. Thanks, Edge Trader. I was trying to like yesterday we had this like private show where I was like, they're gonna try to roll the market over on us in the end of the month. And then I was like, how do I like take a serious tone on this? It's like mechanical. And so you know that like you know, like sell side wants you to take them seriously, and I can't. You can't, not yet. It's like the wrong time of the year. If it was like any other fucking time, if it was like volatile December or January 6th or something, or you know, like it was like fucking March or something, I'd be like, yeah, they're probably right. You know what I mean? I don't know how deep it's going, but like, yeah, we're in May. Like the next 2 months are green. Like, if you bet against that, you got a problem. Like even in a bear market, like we normally go up in June, July, even a little bit. So it's very rare that we don't go up in those months. So like I got like hand ring here. This is how horrible everything is. Hold on a second. I gotta get my hair up. Can't find a hair tie here. Just keep raising your stops here. You can raise them down here if you want. You can keep them right here. Keep them up here if you want. Watch that red bar that's down here. You can see it now right there. And they're trying to make another leg lower here, so watch closely here. And to be honest, we really need to get up here.
Foreign Minister Ishak Dar spoke today with Foreign Minister of the People's Republic of China, Wang Yi.
We kind of need to get up here. We need to take that bad boy out right there. We need to be careful of this one too, being lower. I wouldn't trust this last leg up here. This could go lower and even make a new low. So this is 1, 2, 3, right? Don't trust this 4, 5 because you see like this Goolsby and this auction. What could happen is this turns into something more like this. This is like a new low down here, and then your wing on wing bat wing thing goes like this
Excuse me, at 12 p.m. Eastern Time, we're expecting the EIA
down here and then up because of Goolsby in the auction.
end stocks. Wheat end stocks forecast 850 million, prior 938 million. Soybean end stocks forecast 350 million, prior unchanged from the prior. Cotton end stocks forecast 4.25 million, prior 4.4 million. Corn end stocks forecast 1.945 million, prior 2.127 million.
That over here. That was a nice look above. I would like to see this one come out just a little bit more. Let's see what just that one get taken out right there. We're a little bit short in here. See, you don't know if you can see it, but see that one right there? I'd like to see just this last little tick up here, if possible. Have that right? No, this needs to go up here. Yeah. That one needs to go up there. Okay, I got that right. You could argue that one right there. Market's trying to turn up right now.
So a reminder, in 5 minutes' time, expecting the EIA STIA report. Furthermore, we're also expecting the WASD end stocks, Wheat end stocks forecast 850 million, prior 938 million. Soybean end stocks forecast 350 million, unchanged from the prior. Cotton end stocks forecast 4.24 million, prior 4.4 million. And corn end stocks forecast 1.945 million, prior 2.127 million.
This is an interesting little thing I'm going to show you here. Think tighter, guys. Like I agree with this chart. On here. Like I agree with this chart. I'm going to post a chart for you guys right now. Like I agree with this chart, but you need an unclench. And inflation did not do it today. So maybe manufactured unclench, or it's OPEX, or Vixpiration. There's a lot of bear news coming out here. I'm gonna have to cut these loose here. This is my place right here to cut them loose. Not willing to give any money back to the market. Expectations for semis have pretty much doubled over the past 12 months. Stocks weekly RSI now approaching levels last seen during peak.com mania era.
Surely expecting EIA STIA report, and 1 minute remaining for the WASD end stocks.
This looks like sell flows here, doesn't it? Doesn't look like buy flows in here. Looks like they're just coming right back in again on this 4 hour. You see it? Sellers here, they're coming right back in to sell this one down again.
Ten seconds. Wheat end stocks 762 million, 762 million, lower than forecast of 850 million. Soybean end stocks 310 million, 310 million, lower than forecast of 350 million. Cotton end stocks 3.9 million, 3.9 million, lower than forecast of 4.24 million. Corn end stocks 1.957 million, 1.957 million, higher than forecast of 1.945 million.
So we are still awaiting the release of the EIA STIA report. So seeing the release of the EIA STIA report now, I'll just say some of the most important ones here. So 2026 US oil output seen at 13.65 million barrels per day from the prior forecast of 13.51. They see 2027 output of 14.1 million barrels per day, up from the prior 13.95. Natural gas output seen at 110.6 billion cubic feet a day. The prior forecast was 109.6 BCF per day. 2027 demand seen at 115 from 112.6. The WTI price to average $85.68 a barrel. Prior forecast was $87.41 a barrel. For 2027, the forecast is seen at $74.39 from $72.43. And we've posted the STIA report on the feed for those interested. The EIA assumes that the Strait of Hormuz will be closed through late May and gradual resumption of traffic to resume in June, reaching pre-conflict levels later this year. And the EIA estimates that 10.5 million barrels per day of crude oil output was shut in during April from Iraq, Saudi Arabia, Kuwait, the UAE, Qatar, and Bahrain. US CBP anticipates, as of May 11th, paying tariff refunds with interest of $35.46 billion on 8.3 million entries, according to a court filing.
Huh? Oh, so fucking stupid. Liar.
The EIA expects output and trade patterns to return to pre-conflict levels by late this year or early next year, even after the Strait of Hormuz flows resume. The EIA expects Iran war-related oil production shut-ins to peak at about 10.8 million barrels per day in May.
So I'm going to watch this here for this 10-year in Goolsby. We just want to make sure that we don't get sucked down for a new low for the new leg higher. Thank you. What's the other one? Hang tight here, guys. Give me 1 second. I'll be right back.
The EIA says if the Strait of Hormuz is shut through late June, crude oil prices would be $20 a barrel higher than the current forecasts assume. So, seeing from an Al Jazeera reporter on X, citing an informed source familiar with the course of negotiations between Iran and the US, confirmed that the Supreme Leader's directives to the Iranian negotiating team included a condition to achieve 5 points before commencing negotiations on the nuclear file. So, the 5 points are ending the war on all fronts, lifting all sanctions, releasing the frozen funds, compensating for the damages and losses resulting from the Iran war, and recognizing Iran's sovereign right over the Strait of Hormuz. So, again, it's just a list of the Iran demands in negotiations before they get onto the nuclear topic, being cited by an informed source. So the majority of the US Senate has voted to confirm Warsh to be the Federal Reserve Governor, though voting does continue. But again, that is Warsh with enough votes to become Fed Reserve Governor. So officially now the US Senate confirms Kevin Warsh to be the Federal Reserve Governor.
I'm here, guys.
So there's reports that the EU are in talks to join a US-led alliance to secure tech supply chains.
No reaction here on Warsh. I'm interested to see what Goolsby has to say here coming up at 1 p.m. I'll try to get if I can get a live feed of this. The U.S. Senate on Tuesday confirmed Kevin Warsh to a 14-year term as Federal Reserve Governor, marking an important step towards his succeeding Jay Powell as the U.S. Central Bank's next leader. Here are some details. The Senate is expected to immediately start the confirmation process for Warsh's concurrent 4-year term as Fed chair, holding a so-called cloture vote that starts a countdown towards approving him for the leadership post as soon as Wednesday. Powell's term as chair ends on Friday. A lawyer and financier and former Fed Governor Warsh is on course to lead the Fed at a time when the central bank's political independence is being tested by pressure from the admin to deliver the interest rate cuts demanded by President Donald Trump. Trump's unprecedented efforts to exert control over the Fed, including the attempted firing of Governor Lisa Cook in a case now before the Supreme Court, and support for a Department of Justice investigation into Powell's management of a building renovation that a federal judge ruled was pretext for pressuring Powell to cut rates or resign. The DOJ dropped its investigation, but its lead prosecutor in Washington says she could reopen it. Powell plans to take the unusual step of staying on as governor after his chair term ends in response to the quote, series of legal attacks on the Fed which threaten our ability to conduct monetary policy without considering political factors, end quote. Warsh says he plans, quote, regime change, end quote, at the Fed, including tightening its coordination with the Treasury Department and the Trump administration on non-monetary policies and setting it on a course for a smaller balance sheet, which he argues should allow for lower policy rate. So right now we're in this, we stopped QT, I want to say in December, and we've been doing some quantitative easing in the background. Warsh wants to get back onto the QT and then use rates or rate cutting, the short end, to please markets. A surge in oil prices since the start of the Iran war has pushed up inflation and pared investor expectations for an interest rate cut this year. Currently, financial markets are pricing in about a 1 in 3 chance of a rate hike by December. The Fed's current target range for short-term borrowing costs is 3.50 to 3.75. The Fed chair has one of 12 votes on the interest rate setting FOMC and is one of 19 voices at the policy setting table. The Fed's next meeting, of course, is in June. I believe it's the 16th and 17th. And that would be where Warsh would be making his next rate decision, unless we had some kind of an emergency meeting or some kind of a Senate hearing to set the tone early. We have at 1 p.m. a 10-year auction on this news of Warsh. And we also have a Goolsby speaker or speaking engagement at 1 as well. Goolsby came out this morning and he was trying to talk the market down. So just be aware of that. Be aware of, hold on, I got to check this. Thanks. So you have to be careful of the 10-year auction, of course, and whatever Goolsby is going to say here at 1 p.m. We'll see how this, if this unclenches to the upside or we make one more leg lower. But no real reaction here in the market on Warsh. I think it'll be calming to markets, to be honest with you. Like if you're calming the, you got to remember, like a lot of our stock market, the bond market is, if they feel, the bond market feels like, you can get like a knee jerk reaction on a rate hike, but post that rate hike, if the bond market believes that the Federal Reserve and the Treasury Department is taking inflation seriously, it's actually usually productive for markets to go higher. I realize that people think that they're like rate cuts are good for market, right? QE good for market. Normally, though, that's an after effect of the markets heading much lower. Where we have we're at the end of a business cycle, everything is horrible, right? And then you get the Fed put comes in, but it's normally on a low. Does it make sense? It's like you're starting hiking cycles or cutting cycles. You're normally starting a cutting cycle on a low. So if you're in this, like, we're still quasi in the soft landing right now. We're still in the soft landing, whether you like it or not, or disagree with it or not, or your experience is different or not. We are in it right now. And like comically, the unemployment rate is one of the glaring rates or data sets that are out there where you'll hear like the hand wringing and the pearl clutching. Oh, we got an uptick on unemployment, but in fact, unemployment is in the sweet spot. It's in like the average, historical average for full employment. I know I don't want to hear that, right? So, you know, if you get Warsh in there and he slows down on QT and he's giving you cuts on down moves, I mean, it may or may not work, but the greater point here is that the bond market thinks that you're dealing with natural inflation, which Goolsby might talk about, because he talked about services inflation, which is where you can see if natural inflation is rearing its ugly head. Wars could calm that by saying we're going to look at it, fight it, and whatever. So you get like a Fed trying to get rid of QE, and you get a Fed that's trying to fight inflation. The markets, believe it or not, can react positively, even if there's an initial knee jerk on, let's say, a rate hike. Does that make any sense? Hopefully it does make some sense. But at any rate, you can still run this inflation kind of hot right now, especially if we're going to look through inflation, if there's a resolution with China and on the Strait of Hormuz subject. I want you to ask you that question here too, which is, if you see Trump go to China and you see this resolve, like market resolves Strait of Hormuz, and you look through Strait of Hormuz inflation, it's going to be there and it's going to disappear at some point, right? To some extent, it'll always remain somewhat priced into fuel markets. Potential for that strait to close unless maybe the U.S. ran the entire strait or something like that. That will forever be built into the price of gas and oil and a lot of commodities. We build risk into the price of these things permanently, believe it or not, especially if there's no resolution that's different from before the Strait of Hormuz action. So my point here is that no level of tightening is going to bring that price of gas down. A resolution would, but my bigger question here, though, is when you're talking about tightening, are we sufficiently tightening, or are we tight enough to fight natural inflation, or do you need the rate hike to fight the Strait of Hormuz inflation if it resolves? That would seem draconian, right? So my bigger question here, I guess, turns into if all of a sudden you see the meeting between Z and Trump is productive, and we're able to remove, let's say, all the nuclear material from Iran, and there's some kind of a regime change, or some kind of maybe oversight in who is overwatching the strait so that it's forever open. What would the market do? It'd probably go vertical, right? We got like 2 days of this right now. So everybody's asking, like, are you hedged to the downside or whatever? It's like, or how about you hedge to the upside if there's a resolution? It doesn't look like anyone is. It looks like everybody is, looking down and not looking up. Let's watch this close. Let me see if I can get this Goolsby speech here. Hold on. That's one of the neat parts about volatility or doom, is that it eventually resolves itself, right? It's like a neat little package. And before you know it, we're not even talking about it anymore. I'm not seeing Goolsby's speech just yet here. I'm gonna I got some Bloomberg news on here in the background. If they show it, I'll put it on at 1. Let's go. Be careful of a downstroke here at 1 p.m. on this 10-year auction. It's coming up here in just a moment.
The Fed bids for 10-year notes totaling $10 billion.
Bring this over so we can see this prior low right here. Thanks. Weakness into the 10-year and Goolsby.
Alphabet shares extend their drop. They're down 1.2% now. So, in 10 minutes' time now, at the top of the hour, the US is due to sell $42 billion in 10-year notes. The prior high yield was 4.282%, and the prior bid to cover was 2.43. So, looking to a note ahead of this 10-year sale, then, the treasuries today are holding losses following the April CPI report as outright concession builds ahead of this $42 billion auction. The sale follows soft demand that was seen on yesterday's 3-year note auction and comes ahead of tomorrow's $25 billion new issue sale. Into today's auctions, long end yields are revisiting a 5% handle as oil rally extends and gilts tumble, adding upside pressure to treasury yields. So, given an unsupported fundamental backdrop and rich valuations, JP Morgan strategists see the auction as likely requiring more of a concession in order to be digested smoothly. The latest CFTC positioning data shows that speculators were net short 105,000 10-year note futures and short 815,000 ultra 10-year futures, potential sources of covering demand at the auction. So alongside the 10-year sale,
10 years at 4.45 right now.
Chicago Fed President Goolsby speaking at the Greater Rockford Chamber of Commerce luncheon. No text is expected from Goolsby, but there will be a Q&A.
If this 10-year yield comes in hot, we will drop. We're at 4.455. If we go above like 4.50, we could see a dump. So I want to watch this very closely here. Last time we had a spike like this, led to a pretty significant dump in here. Let's keep your eye on the 10-year yield here. I'm watching it in the background.
So in 5 minutes' time now, at the top of the hour, we're expecting comments from Fed's Goolsby, who speaks at the Greater Rockford Chamber of Commerce luncheon. No text is expected. There will be a Q&A, and the video is on the feed for those interested. Also at the top of the hour, US due to sell $42 billion in 10-year notes. The prior high yield was
Nice.
4.2%, and the prior bid to cover was 2.43.
I've got the speech up here. Let's be careful of a bear raid here. Sounds like they're trying to set the tone. It's going to be manufactured doom coming up in here. And try to trade the reaction. If you're a bull, you're looking for, you do not want to see anything. We're at 4.455. If you see anything above 4.50, be sketched out. Equal legs down here. No new low yet. Yield climbing right now. Now at 459. The yield was good. Just a note.
One of the most watched data points nationally. It helps people understand the overall climate of the economy, from what they're paying at the grocery store to what it costs to run a business. The GRCC exists to connect, support, and elevate the Rockford regional business community, and bringing a conversation like this to our region is a perfect example of that mission in action. So we want Rockford to have a seat at the table when it comes to understanding the forces shaping the business and economic future. And today, you'll hear directly from one of the people at the center of it all. Austin Goolsby, President and CEO of the Federal Reserve Bank of Chicago. But first, leading today's conversation with Mr. Goolsby is our very own CEO, Angela K. Larson. So a little bit about Angela.
Hey, that auction was good. It was good for bulls, if you don't know.
And there is no one better suited to guide this discussion on behalf of our business community. Angela spent most of her career in the manufacturing sector, serving as VP of Marketing for Woods Equipment Company, where she was responsible for product development, pricing optimization, channel strategy, and all aspects of promotion and corporate communication. In that role, she was part of the commercialization team, expanding the company into Brazil and Europe. She served as a board member and chairman of the board of German American State Bank for more than 12 years, and has also lent her business and strategy expertise to organizations in the manufacturing, healthcare, nonprofit, high-tech, agriculture, and construction sectors. She joined the GRCC in July of 2024 as CEO, and we're so glad she's here. So we can clap for that. That sounds nice. So right before we introduce Austin, a little bit about how today's going to work. As you listen to today's conversation, we encourage you to write down any questions you have on the question cards at the table. Our GRCC staff will circulate throughout the room to collect them, and Angela will make sure your questions are heard. We want this to be an interactive and valuable experience for everyone here, so don't be shy, but please be polite. There are no bad questions when it comes to understanding the economy. And now it is my honor to introduce today's featured guest, Austin Goolsby. Austin Goolsby is President and Chief Executive Officer of the Federal Reserve Bank of Chicago. In this capacity, he serves on the Federal Open Market Committee, the Federal Reserve System's monetary policy-making body, and leads...
Sorry to take a phone call right there really quick. This was a good auction.
Conditions in support of the formulation of monetary policy, supervises and regulates banks.
Another bear doom thing that's not working out again today. Inflation didn't work out, and then we have a 10-year yield of 4.468. Bid to cover was 2.4. Sells 42 billion. Awards 22% of bids at high. Dealers took 12. Primary took 12. Direct took 24.1. Indirect 64.
Different industries and on economic.
So it didn't come in over 4 or 5. So if you're looking for like a D or F rating, that wasn't it. This is like I would say it's an A for where we are in the market. Market recovering and turn to it right now. And then we're just listening here to Goolsby.
Advisory panel to the Federal Reserve Bank of New York, the panel of economic advisors to the Congressional Budget Office, the U.S. Census Advisory.
So the Bear Doom book not really working out as planned here.
And the External Advisory Group on the Digital Technology for the International Monetary Fund. I think at some point he sleeps.
I think this is a mono transmission.
Here, so maybe not. Mr. Goolsby has a PhD in economics from the Massachusetts Institute
I can only hear.
of Technology and a bachelor's and master's in economics.
Yeah, I think that they recorded this in mono or something.
3 children. So please join me in welcoming both Austin and Angela to the stage.
Slide this over here. Still alive.
Thank you, Caitlin.
Want to get above that one right there.
Thing is on. Thank you, Caitlin. Welcome, everyone. We really appreciate you being here. It's pretty exciting to host Austin Goolsby. Sorry.
It's a pleasure to be here. Am I on?
You're on.
I am.
You're on.
Okay.
So as we know, it's these opportunities to learn more about our economy, especially from an expert like Austin, is really an opportunity to think about our own businesses, about our community, and about the future of work here in the Rockford region. So as you all know,
a live
our
event with
region
Fed's
is
Goolsby
built
has
on
started.
grit
We've got
and
a live video on the
innovation
feed
and
for those interested.
perseverance. A lot of that is our background as a manufacturing community. We talked a little bit about how, as a manufacturing community, we are a bellwether for the state, maybe even the Midwest and the country, because manufacturers react quickly to economic changes. With that, 20% of our regional workforce represents the manufacturing sector, and we know that many people in this room support the sector, are part of the sector, and represent many, many other businesses that make up the local economy. We're going to talk a lot today about some of the things that are affecting this current situation. We've got tariffs, we've got labor policy changes, workforce needs, war, turbulence. It's a really incredible time to be talking about the economy because there's so many external factors that are changing it day to day. So as Caitlin said, you all have a chance to ask questions. Those cards are on your table. Please write them as you go along. A member of the staff will grab them, and we'll get to as many as we can at the end. So we'll get started with the fireside chat, and in a bit, we'll turn it over for questions. So first of all, many of the people in this room probably do not interact with the Federal Reserve Bank on a day-to-day basis. So start us off by giving that primer on the bank.
Okay, that's a polite way to say, well, what do you do all day? Why does Chicago even have a Federal Reserve Bank? The Fed sets interest rate policies every 6 weeks in Washington, D.C. In 1913, they passed the Federal Reserve Act, and because people at that time, as today, were deeply uncomfortable with Washington, D.C. and the federal government controlling the entire financial system of the United States with no input from the rest of the country, they added 12 reserve banks spaced around the nation. The Federal Reserve Bank of Chicago is 90% of Iowa, Wisconsin, Illinois, Indiana, Michigan, so heart of the Midwest. There's some goofy aspects about how they distributed the banks. They needed the Speaker of the House was from Missouri and the head of the banking committee was from Missouri. So actually 2 of the 12 banks are in Missouri. There's Kansas City and St. Louis. But the overall idea that we should have a diverse regionally and people with diverse backgrounds sitting around the table when they're making those decisions has proved lasting and an important insight. The other things the Fed does, though, there are about a little less than 2,000 people work at Chicago Fed. We're a bank to the banks. The Federal Reserve System does the majority of the payments and the plumbing of the financial system, wire transfers, ACH, direct deposit, stuff like that. $6 trillion per day we're doing on those payments. All the cash in the economy is printed by the Bureau of Engraving and Printing, but is distributed through the feds, and we have a big vaults with giant 80,000-pound doors with billions and billions of dollars of cash that we run through the machines in and out every day to send to ATMs around the region. We oversee and supervise the banks, so we have a lot of bank examiners who are down checking to make sure that the banks have the capital they say they have, that they're following the consumer protection laws. And we're highly involved in the community and community engagement, development, as well as gathering business intelligence. And that's mostly what the Fed does. So when we come out to Rockford, I think your observation is exactly right. It's what I usually say about the Chicago's district as heart of the Midwest is by far the most manufacturing of all the districts. And Rockford is more manufacturing than the most manufacturing district. And the thing about that is that manufacturing is one of the most cyclical industries. So begrudgingly, because there is a lot of rivalry between the different regions.
The Nasdaq 100 extends losses, last
they
down
will
2.1%.
often ask, well, what are you seeing in Chicago? Precisely because that is a little bit of a leading indicator about the business cycle. So then you say, why am I in Rockford? Same reason. Same reason, really. And that maybe that introduces us to the whole list of whatever you're going to ask about. And I have the questions to you and to this audience, because I want to know what are you seeing? What are we seeing on costs? What are we seeing on employment? What are we seeing on output growth and demand? Because you're one step ahead, you know, of where the others are going.
Thanks. We like to think that. One step ahead. So,
Chamber, you got that marketing thing. You're like one step ahead. You're like one step ahead.
So let's talk a little bit more about the Fed, because you've had some interesting headlines in the past several weeks, and some people think that independence of the central bank is threatened. Kevin Warsh, right? Just in the final rounds of getting approved as the chair, he actually said that he thought the Fed needed a good shaking up, right? A good family fight, I think were his words. Jerome Powell has chosen to stay on as he leaves the chairmanship.
The U.S. Appeals Court temporarily pauses the trade court ruling against Trump's 10% tariff under Section 122.
Most dissent votes.
30-something years.
Yeah. And we keep hearing about the cost overruns on the remodeling. The sound bites. So what is the truth, and how threatened is the independence?
Let's take one step back. The Federal Reserve Act lays out a simple job, simple to understand but not simple to enact job to the Fed when setting monetary policy, which in our language is called the dual mandate. And the law says we are to maximize employment and stabilize prices. That's the job. The whole job and nothing but the job in monetary policy is that. The reason why, before I've been at the Fed, it's my 4th year. Before that, I was an economist for a long time at the University of Chicago. Economists are virtually unanimous on the importance of central bank independence, not just the Fed, in any country, that the sitting administration not be able to dictate to the central bank, here's what we want you to do with interest rates. And that's not just a theoretical. There have been many countries around the world at many times where they didn't have central bank independence. And what happens is exactly what you would think would happen. You get inflation comes roaring back, GDP growth is slower, the job market does worse, because the short-run incentives differ from the long-run incentives. I don't think Fed independence is truly under threat, or maybe that's the wrong phrase. I don't think that it's going away. The people who sit around the table take the job extremely seriously. Regardless, there are people from different partisan backgrounds, different industry backgrounds. There's economists, there's business people, there's finance people. Everybody comes there in a way that is not, you're out of the elections business, you're out of anything but the dual mandate business of thinking through the economic conditions and what is warranted for setting up policy. And we're all just down there trying to figure it out. And I have an amazing research staff at the Federal Reserve Bank of Chicago. Superb. The other reserve banks have excellent, not as good as ours, but pretty good research departments. And they're coming with these perspectives. If we were to take away Fed independence of this narrow form, all I'm talking about is independence from political interference in setting the interest rate. inflation will come roaring back. That is what happens if you do not have central bank independence. And it comes as no surprise to anyone in this room or anyone in the economic surveys. We have an inflation problem already in this country. People are identifying that their number one concern about the economy, prices and affordability. I guess that's the number one and two concern, but the prices and affordability. And so I just want us to, before we truly start dismantling the Fed independence that we have built over decades, let's just think what the consequences would be.
His research team, the lead is here today, and I just want everyone to know she now has a copy of the Chamber of Commerce Quarterly Business Sentiment Survey results, and we will be feeding those to her and her research team.
Filling out the survey right now.
So, so the Consumer Price Index was released this morning.
Yes.
And a slight uptick, but what does it tell us about where inflation is headed?
Not much that's good is what it tells us. So the Fed has for many years now said there is a 2% inflation target. And if we want to really get in the weeds, it's not CPI. CPI is one measure of inflation. PCE is a different measure of inflation. It's 2% on PCE inflation. Fine. Think of it as 2%. We've been above 2%
Goolsby says the CPI report.
Yeah, listen to this closely here.
That's good.
Hey, that's not good. It was making progress. Then we stalled out around 3% inflation and stopped making progress. That was last year. We believed that a lot of that was from tariffs and so would not last, that would be a spike to prices, but then the inflation part would stop going up. Now, before that went away, we've added this oil price bit from the war, and not only are we not making progress, it's going the wrong way. And it's going the wrong way, not just in oil-related things and not just in tariff-related things. Now you've seen drifting upward of services inflation. And I keep highlighting, for me, that's the part that I'm nervous about. I want to see that at least stop growing and hopefully start going back down, because that can't really be.
Goolsby says inflation is going the wrong way, not just in oil-related and tariff-related
things.
things.
Tariff component. So we need to keep an eye on that. The numbers today were mostly what was expected, but the unexpectedly disappointing part, in my mind, was on the services side.
Ah, shit, Bears.
And I believe
Hold on.
overall was higher as well.
Energy is way up. It would drive
Goolsby
my
adds
mom
that the
crazy
drift
about
up in services inflation is a worry.
No. The Fed sets the interest rate.
Got a hand ring.
Core inflation, which means take and take out food and take out energy. And then at that point, what do you mean take out
Mike
food?
Barry's in his office right now.
What I want to pay attention to,
Hold on.
the reason we take that out is because those ones are up and down a lot. And so they don't give you as good of a sense of what's the through line. That we saw very dramatic energy inflation was expected. That's why the headline number was as bad as it was.
Hold on. I got to do some more hand ringing over here. I didn't get the inflation print I wanted. I didn't get the fucking 10-year. Goolsby's supposed to be a hawk.
Oil prices do indeed prove to be passing. That should come down.
Give you the gains. I'll call it hand wringing. Hand wringing for Bears.
And the city of Rockford did a housing study and identified that we needed 3,000.
Hold on. I just need one pair. I don't need two. Hold on a second here.
So, and this is a crisis that is housing crisis across the country.
Yes.
There's so many elements that go into it, but What do you think it will take to address housing affordability and availability?
This is an issue in Rockford. You were, by some measure, the hottest housing market in the entire country.
According to Zillow and in the top 20 by the Wall Street Journal.
Okay, so the thing about being a hot housing market is that's good and it's bad at the same time. Because on one hand, you're like, yeah.
Goolsby, you know Goolsby likes to hit the fucking cocaine pile at the parties, right? He's like the closet cocaine master.
That can block out new families trying to get in. It can make it it's not just
up. Keep going up. Good print over here. Goolsby's like, yeah, fucking whatever.
We travel around. If I come out and start talking to you about your businesses, we're very likely to hear. We just a couple months ago we went to Cedar Rapids, Iowa. Not a huge urban center, not a big metro area. I asked, what is the #1 problem facing Cedar Rapids? They said, the cost of housing. We can't attract workers to come here because they can't afford the housing. This is we must build more housing. First of all, maybe it's overly simplistic economist in me. You want the price to go down, you either got to reduce demand or increase supply. The demand is not reducing, you got to build more houses. Therein lies the complications that are coming from the cost of building materials are up, the cost of the cost of fuel is up, the cost of labor in the construction sector is up, and so it's not as cheap to build as it was in the past, and the time it takes to build out these units. You said that sounded like almost 10,000 units just for Rockford City, Rockford area. I don't know. That's a lot of units. It's not going to, you can't build 10,000 new units in a 3-month period. So we're grappling with throughout the region and throughout the country.
That's the tick we're looking for right there. That's a good tick right there. We should then go up and do one more. So this is this move right here. Done.
It has shown some pretty remarkable resilience.
Just looking for a back test over here.
But our quarterly sentiment survey continues to show the availability of skilled workers as the number
Just
one
looking for that right there.
the company. So where do you see the labor market headed? And are there any early warning signs that you're watching?
I have characterized the labor market overall as stable without being good. And by that, I mean we're getting a bunch of
It's actually better than that.
The one thing that
It's better than you think it is. If you follow Wolf Richter, he points out where all the jobs are. If you're involved in any kind of the manufacturing build out, any kind of the data center build out, manufacturing data center build outs, energy build outs, electricians making bank. I think I've told you that though for like a past year.
labor force participation.
You have to search.
That number doesn't mean what we always thought it meant. So we've been getting low job creation. Some people interpret that as that's a sign the job market is about to fall apart. That's what usually happens when you see that. But it didn't fall apart. And I usually say...
Yeah, it's not a bad job market. It's just a unique job market.
You're better off looking at rates. And the 4 horsemen of the truth, I say, are the unemployment rate, the vacancy rate,
yes,
the hiring rate,
yes,
the layoff rate.
Yes.
All 4 of those have been stable for almost a year and a half, but they say different things.
I read some other serious or I will start whack stories saying young adults, prime working age adults are not participating. That's false.
It would correspond
It's one of the highest participation rates in history. It's actually one of the highest participation rates since the late 1990s. We're actually the male participation rate in employment is reaching the highs of the 1990s. I'm just going to show you that really quick.
low firing, let me get a environment simultaneously. It's worth noting how weird that is. That's very unusual. You normally have either high firing with high layoffs and firing with low hiring, or you have a lot of hiring because layoffs are really low. That both of those are low at the same time, I think comes from uncertainty. That you've got businesses saying, we just so much.
Hey, you want something neat?
We're just going to sit on our hand. We're not going to hire anybody. We're not going to let go of the people we have. We just want this to be resolved in the next 6 months. And partly that was from tariffs. Then we got.
This is the prime age participation
I
rate.
feel like that uncertainty is going down anytime soon. So I kind of think we're.
And look at this here. This is 96.
Labor market environment.
This is 97.
What could trigger a change
Or excuse me. This is 86. Excuse me.
For sure. You thought we were
92, 90, 92 in here. But then look at this here. This is the if you want like the data that matches the bubble from the late 1990s.
trade war.
We're right here right now,
The price of oil up.
and this is 1997.
Shocks style.
So you'd expect a higher participation rate
Highlight
and the bubble to continue into 2000.
of the economy, but
As a matter of fact, if you were to look at this chart right here,
2025.
it would behoove you to participate in work
AI data centers and the growth.
as long as you possibly can over here, right? If you follow my cursor over here,
driver of
you should be working your ass off right now because let's say we do run into a bursting of the bubble.
consumer spending.
We start to do this roll down over here. That wouldn't be fun, would it?
Growth spending.
And just look at that dump down here in workforce participation rate.
If that were subject to change, which entirely it could be, the price of oil went up, consumer sentiment is way down, there are different warning signs. If people stop spending because they say, hey, I need to build up a precautionary moat of savings in case something goes wrong, I think the job market would stop being stable.
I heard on Squawk Box this morning, which is where I normally see you, that with the tax returns that came,
Yeah.
about 25% were spent on discretionary, 20% on debt, and about half put into savings.
Interesting.
Isn't that
He's being fairly reasonable right now in a lot of what he's saying.
Normal? That's what I'd need to check.
We'll ask your research team.
Yeah,
to look that
they'll
up.
be able to figure that out. They might figure it out by the end of this lunch.
But it was the savings that surprised
50%,
me.
Yeah, exactly.
Yeah.
If 50% of the tax refund saving was going into savings, that feels higher than
normal.
perhaps.
Yeah.
And that wouldn't be a great sign.
And the checks themselves were higher than usual.
There's anything you really want to watch right now too. It's wage growth. Can it keep up with inflation, or does it jump the shark on inflation, or does it stay lower than inflation? If there's like something you want to be watching right now, probably the wage growth.
Anticipating the return of jobs to the Stellantis
Right.
assembly plant in Belvedere. But at the same time, we've got these.
I think the retirements. I think the retirement numbers are separate from that number. I think they're counted separately. I could be wrong, but I think so. There's something about the retirements. Like we're in the middle of a wave. We're in the middle of like a really large wave of government jobs being slashed. Even though we're now doing some rehiring, we're also in a large removal of illegal immigrants or undocumented immigrants. But part of that is the enforcement, but the other part of it is people just not doing the immigration part right now. So like you have a lot of like the turnover and let's say I'm an illegal or undocumented worker, whatever you want to call them. And I'm aging out, let's say, right? Or I'm just saying, fuck it, I'm going to give up. I'll be back when there's when things are easier. And then there's like new people trying to get in the U.S. that are not bothering right now. So you have the loss of those workers too. And a lot of them work legally, not illegally. Like they borrow a social security number that they pay taxes on. Do you guys know a lot about this stuff? Like I used to live out west. Some of you may not live out west. What I would see in a real ID state was someone would loan out their social security number, and then they would have you pay into X amount of dollars into taxes, and then whatever the return is, that you'd pay me for the use of that social security number. If you don't know how it's done, that's how it's done. So you still have some of those workers, but you still have people that are afraid to work or new workers coming in. So anyways, in the workforce participation rate, we have less people due to the government layoffs federally, not state. As a matter of fact, states have been picking up some of that slack. And the Fed's not here to worry about employment in the Fed or from federal workers either. But then we're in the midst right now of major waves of boomers, like real boomers, not the fucking what kids call boomers, like true boomers. We're still in the midst of their retirement wave. Like we're in the midst of like a major retirement, the tail end of boomers. So that probably helps too to some extent.
Adjust or improve our own productivity. In the long run, we're going to be in a tough.
Yeah, I wouldn't call it random. From my experience, it was always a rented number. It was like specifically from a legit number. So, like, they pay taxes. And they say they don't pay taxes, but they do. It's very rare to find an actual like an old school undocumented worker. It's very rare these days. It's not easy. If you think about like being an undocumented worker as it is, like it's not easy. And then think about just being pure cash. These days, not easy, right? None of it's easy. So the way they get around it usually now is by presenting as someone that they're not. And it's not usually nefarious. It's normally like an American lending out their shit. Or even a naturalized or a visa, someone with a work visa, or someone with a naturalized, or someone that's made second, third generation or something. But it's still a tale as old as time too. You know, a lot of this stuff we deal with is, you know, it's kind of like I grew up in Boston, and when I was a boy, you know, like Irish terrorists were real still. My mom is from South Boston, and so like for multiple generations. So like when I was a kid, we'd go to St. Patrick's Day. We'd go to a Gaelic League, and they would literally sponsor prisoners of war from Ireland that were released, and they came to the U.S. for asylum.
We're no longer in the baselines now. Moving to the adverse one.
And these guys are terrorists. It's like when you're like whenever I hear like the things today about like I don't like Muslims or the Muslims that are coming in the U.S. or they're gonna overrun the U.S. that kind of shit.
ECB rate hikes are becoming increasingly.
The
farm knowledge.
Yeah.
like the fear of new immigrants to the U.S. I'm like, man, I remember being a kid and it was still actively happening with Irish people, you know.
Okay, final.
And then of course they assimilate at some point, right? 2-3 generations.
Okay. This is in the spirit of America 250.
Okay.
Right, we're celebrating 250 years of freedom this year, and I was interested when I found this fact.
There's always like a boogeyman, you know. That's my point.
The Wealth of Nations, right? The preeminent book.
1776.
Yes.
And we all rely upon illegal immigrants, right? Like it's like our slave class in the U.S. to an extent.
Economy connected.
We do it even for our devices, like for mining of minerals, rare earths, building phones. They put nets outside of buildings on the devices that we buy in another country. As long as it's not America, though, it's fine, right?
And there were a lot of economic grievances fun to go back and read the Declaration of Independence. And everybody knows the beginning part. And it's like, we hold these truths to be self-evident. And then it's a list of grievances of the stupid king did this and he taxed us. And it lists like all of these stuff. And many of them are economic in nature. I think what has made the United States the richest major economy in the world is the innovative capacity of our people. And I used to teach at the business school, and I had
I think that's what made us exceptional, taking in immigrants.
from Germany, I think.
Anyone you didn't want, we took in, usually the smartest people, right? The repressed people. I think it's what made America special.
To Germany after graduation. And he said, no, I'm not, because I want to do a startup. And he said, where I'm from, if I go and I say, I'm going to start,
You have a marker over there?
and it's going to do this, everybody will give me,
I just want to label these hand-wringing drumsticks.
that'll never work, you're going to embarrass yourself. If that fails, you'll never get a job, you know. And he said, in here, if I tell people, I'm going to start my own company, they're like, that's a great idea. I'll come work for you. Why don't you hire me? You know, let's do this. And that entrepreneurial spirit is kind of rooted in Adam Smith and capitalism. And I do think that's been a key element to the U.S.'s growth over 250 years. Though the 1776, July the 4th, there's a little bit of controversy of should it have been July the 4th. So they decided they declared independence some days before. And
I labeled them hand-wringers.
John Adams evidently said, July the 2nd. This is the day that will live forever, on July the 2nd, when we declared independence. But they didn't write it down, so then they wrote it. But
The hand-wringer drumsticks.
Declaration of Independence was kept somewhere that, and it was written on some kind of paper that degraded, and so then no one could read it. So they got all the people, all the declarations of independence that we see today, the originals aren't originals. They're copies, and they went back and they got the people sign how you would have signed it. And evidently, I think there's one of the people who was there at the original, but he wasn't.
Like responding to DMs right now, trying to catch up on DMs.
That person isn't listed.
What a bummer. Like,
Yeah, I know.
it's like the importance of showing up. Show up.
Exactly.
Yeah.
Where were you?
Yeah.
Where were you? You come back to your, 30th high school reunion. Go to the reunion.
Look how popular you are.
Yeah, what is
Oh my
this?
gosh,
US
these are
Defense Secretary
questions.
Hegseth and
they
Trade
asking how to
Representative
fill out
Greer
the
are
survey?
traveling to
They're
China
saying,
with
Austin,
Trump,
I have a
according to
question,
the
and we
press
have
pool.
20 minutes.
Okay, 20 minutes.
And-
that was her polite way to say I'm too long. My answers. I'll be.
Got it. You
I'll be-
got it. This one is from Kika Young of Forest City Gear. Do you believe the manufacturing momentum we're experiencing in defense, aerospace, robotics, etc., is durable long-term? Are we right to remain cautious with long-term investments?
Yes and yes. Look, if we're going to be in a world filled with more conflict, there's going to be more defense spending. So I do think that there can be sustained business in that space. But given how much uncertainty there is, just back up. If you backed up 3 years, 4 years, and you said, we're going to have the highest tariffs in over a century, we're going to have war in the Middle East, the price of oil is going to be $120 a barrel, but it may be down to 70 within a few months, you would be cautious about making long-term investments.
Do you see that? That's the assumption of the street, that it'll be that it's you're looking through this conflict. SOH.
I think this is another.
That's the assumption the street is operating on.
Works because we asked that question.
Bloomberg terminals say the same thing. There's no contra to that, even though you're being fed that publicly in news.
This one is from Stephen Platkow at Armory 815. So he's in the service sector,
Okay.
which we saw change in the consumer.
He's being fairly frank here.
Industries are most most likely to see productivity
Goolsby.
from AI and automation?
What we've seen so far in the uptick of productivity, I like to tell people it can't be more than 10, 15% straight from AI because AI adoption hasn't been big enough. But that said, if you interpret AI more broadly than just LLMs and ChatGPT, the role of technology in a lot of technology using industries, that's where you've seen the productivity growth increase the most. We hold out hope that where there would be an increase would be in healthcare, because healthcare is such a big share of the economy. I got the list of the leading employers in Rockford metro area. The top 3 are healthcare companies, and that's true in almost every metro area in the United States. So hopefully we will see productivity growth in those spaces, but so far it's been mostly concentrated among heaviest tech users.
Another from the manufacturing sector. This is from John at Welder Supply. Is copper pricing sending a false signal to manufacturing?
A false signal? Why would it be a false signal?
What's happening with copper pricing? John?
It's up to record high.
Yeah, record highs. That's what I thought. I don't view that as a false signal. That's when you see commodity prices going up. It's like I say, my oversimplifying economists all the time. You see the prices going up. It's a false signal if you're just purely interpreting the high price. That must mean there's tons of demand. Maybe, but it could mean there's a restriction of supply, and I'm willing to bet that a lot of that is the restriction of supply, because you're seeing commodities in many forms, not just petroleum, not just fertilizer, but the farmers are feeling the input costs rising a lot. Manufacturing, you're seeing a lot of input costs rising. So it's a different signal, but not necessarily a false signal.
This next question is about private credit, and I just think the whole private financing is a dynamic that's really changed a lot. Given the rise of rapid growth of private credit and interconnectedness with traditional financial institutions, at what point do rising defaults or liquidity pressures in private credit become a concern for financial stability?
So the appeals court is weighing the U.S. bid for a longer pause on the tariff
You've
ruling.
seen a big rise of private credit, decrease relatively of just old-fashioned bank credit, direct lending to individual firms. The only thing that, and it's not very transparent because it's private credit, it doesn't oftentimes show up in the official statistics. And the oldest rule of accounting, we got some accounting students here, the oldest rule of accounting.
So you've got a roll down in VIX 9-day. It's coming into the half an hour and hourly trigger here. Just watch out. I've got some news breaking in just a moment.
That probably means they're not good.
I want to see VIX roll down here and close a gap underneath at $15, but it is parked on the half an hour and hourly trigger right now.
Institutions making the private credit have been less leveraged. They have more equity than in some previous rounds, and the interconnection of private credit with other conventional financial institutions might not be as big as certainly than some of the.
You have the monthly budget statement at 2 p.m.
For example, where one firm going under was threatening to blow up the whole world domino style.
Just give me a second, I'll look at the data on it.
Commercial banks announced that they're going to increase the provisioning for losses. They're going to write down some of the lending that they've been doing to the private credit firms.
Budget deficit should increase here.
The sector is struggling, but it's also a sign that it's not going to come out of the blue. They're trying to
Prepare for it.
Yeah, prepare for it.
Speaking of students, this one comes from Victor.
He's one of the accountants.
What do students misunderstand most about the
Ted
economy,
Goolsby says the
and how can
interconnections
they
of
better
private credit
prepare
with conventional
themselves for
institutions
adulthood?
are not as big as the connections in the 2007 to 2009 financial crisis.
That second one, I'm the wrong guy to ask how to prepare for adulthood. I'm still trying to prepare for adulthood.
We'll ask your mother.
Ask my mom. Talk to my mom. The best way to prepare, call my mom. What do we misunderstand, most misunderstood in the economy? If I had to pick one, I would say the lump of labor fallacy, which is the idea that there's a fixed number of jobs in the economy, and that if a technology replaces the tasks that the current jobs are doing, that we will soon all be unemployed and we are doomed. And the thing that you should always remember is for hundreds of years, we've had new...
Watch out for us stalling here.
And we're all out trying to... The speed at which the technologies come in will...
You know, there's...
displacement. But the thing that made us rich is increasing the skill of our workforce.
Like, we could do this thing where...
If you're a student, you can't look at the 249-year history of the United States. It's a straight...
I want to put this one right here.
Meaning we grow at a kind of a constant rate over centuries. And you
Watch out for like a little bit of like some dumping action in here on this, because our deficit's going to... Like just a dump and then a swing high up here. Like, so this move right here could take into this time period here. And then another swing that could actually lead into a dump tomorrow.
250 years, innovation in labor.
I'm going to move this one over right here.
Okay. We'll see it next time you're here.
Yeah.
Housing affordability. This one comes from Larry at Dickerson Neiman. What are your thoughts on the impact of higher mortgage rates on housing inventory and affordability? How can the Fed...
More like this here.
Larry, you know exactly what the impact of higher mortgage rates is on demand and on construction. The Fed can only indirectly influence...
You know, there's something else here, too, which is...
Top of the hour. You see the release of the US federal budget balance forecast for $220 billion on the prior minus $164 billion.
This recovery should be...
The short-term rates in...
So just a note to you, this recovery is slower than I'd like to see. And I have a question about like a failure in here into the close and then a dump overnight only to be picked straight back up again at like 9 a.m. and then this leg is bigger. They weren't able to get it done down here. I have a feeling they're going to try to dump this overnight. We'll have to watch this pretty closely in here, but there's some stalling. You could probably take this trade up here, but without the breakout above, if we get hung up underneath this hour and half-hour trigger, if we're unable to break out, let's say if we start fading this down on that news drop, and then we're just dumping after the bell. Before we get to Xi and Trump.
Trump on Iran says we're only going to...
I like to see quick recoveries here, like very fast recoveries. We're not getting it.
That the premium, the employment and wage...
We'll watch this closely here.
...for getting an associate's degree, for example, has never been
So Trump
higher.
now currently speaking to reporters
Exactly
at the White
moment
House.
that the funding for...
Trump says, I'm going to have a long talk with China's President Xi about the Iran war.
Let's see if I can get a video of this.
Trump on the China trip says good things will happen. Trump says, I don't think I need China's President Xi's help on Iran, but again says that good things will happen.
This might be.
I didn't see that. You know, I have heard it's sort of crazy, but last week I did.
I don't know if this is him live or not. I got to check.
Successful. They went very well, like this is going very well. And then I didn't do any for 2 days, and they said there must be something wrong with him. Biden wouldn't do them for months. You wouldn't see him.
I don't know if that's live or not.
If it hasn't already happened, I'll let Pete.
Dude, do you fucking MAGA guys? You guys just like print like. I don't know what the fuck is with MAGA. Like, there's like, no offense to you if you're MAGA, but you guys just play like live streams of prior press conferences. There's like 100 of them, all so theoretically all live right now. Like, sorry.
Is something which we were working very hard to make a fair and a reciprocal one.
Yellow tie is live. Okay, thanks for that.
Trump on Iran says that the blockade has been effective.
I'm just like, I'm looking through the streams right now, and I'm like, who the fuck watches this stuff? No, that's a black tie. There's a purple tie. I kid you not. There's a red tie. I shit you not. There's a purple tie at a different angle. I'm not going to bother here. Thanks for saying the yellow tie is live.
Trump on inflation.
I've never seen anything like that, like the cult-ishness of it. No, and that's not trying to be, I'm not trying to slight MAGA. It's bizarre to see so many Trump live streams of different press conferences. And the fact that people are actually watching them right now is even more bizarre. Let me see here. Wait a minute. What do we got here? Oh, I got it.
Inflation was at 1.7%.
This is legit.
We had a choice. Let these lunatics have a nuclear
It's
weapon.
been 5 minutes time now at the top of the hour. We get the US federal budget balance. Forecast 220 billion, prior minus 164
Anybody that
billion.
wants them to have a nuclear weapon is a stupid person. So we said we're going to take the greatest stock market in history, and we're going to go down a little bit. And actually, that turned out to be incorrect because our stock market is now at the highest point in history, which frankly surprised a lot of people. It's a very simple message. Iran cannot have a nuclear weapon, and they won't have a nuclear weapon, and that's 100%. Their Navy is gone, their Air Force is gone, their anti-aircraft is gone, their radar is gone, their leaders are gone. They're all gone. Iran will not have a nuclear weapon.
Are you ready to extend a waiver on sanctioned Russian oil to ease the global food crisis?
We're going to do whatever is necessary, and as soon as this war is over, which will not be long, you're going to see oil prices drop, and you're going to see a stock market,
Trump on the Russian
which
oil
is
waiver
already
says,
at
I will
the
do whatever is
highest point
necessary.
in history, go through the roof. You're going to see the golden age of America, frankly, and you're seeing it now. So as soon as this is, don't forget, you have hundreds of ships that are loaded up with oil that want to come out. As soon as they come out, we're going to have a gusher of oil, and you're going to have inflation that goes way down. Now, with
Trump
all of
says
this,
our inflation is short
is
term.
much lower than it was under Biden. Biden had the highest inflation in the history of our country. Inflation is nothing by comparison, but our inflation is just short term. Because if you go from just before the war, we were for the last 3 months 1.7%. And now what you have is as soon as this war is over, you're going to see inflation go down to Probably 1.5%.
Will you extend the waiver? Will you extend the waiver, sir? Will you extend the waiver on Russian crude?
Go ahead, please.
Thank you so much, Mr. President. Mr. President, yesterday you said you gave the Kurds arms, but they built it for themselves. A U.S. military official says that the Kurds have not received any arms, and the Kurdish political parties are denying receiving any arms.
The officials are wrong.
The resident Chinese people, sir.
So what happened is we have a ballroom that's under budget. It's going up right here. I've doubled the size of it because we obviously need that. And we're right now on budget, under budget, and ahead of schedule. I doubled the size of it, you dumb person. Double the size. You are not a smart person. Right over here. Wait a minute. Right over here. And based on a lot of things that have happened over the last year,
Goolsby says the job market is basically stable, but inflation is going up.
So we're going to have a ballroom that's appropriate for the White House. We doubled the size. The ballroom now is ahead of schedule, and it's a little bit under
says,
budget.
not at this moment. We're not at this moment in a difficult balancing act for the Fed.
Does the president of Cuba have his days numbered?
Well, they're not doing well. Cuba is not doing well. It's a failed nation, and we'll be talking about...
Goolsby says, I remain optimistic that rates can come down a fair amount, but need progress on inflation.
Venezuela. Some Venezuelans are concerned that there are some political prisoners still in their prisons. Would you do something about that?
Yeah, we'll do it. We're going to get them all out. And I'll tell you what, Delcy's doing a great job. The people of Venezuela are thrilled with what's happened. They can't even believe it. They're dancing in the streets. And as you know, we have Exxon, we have Chevron, we have all of the big companies going in. And Venezuela now is making more money than they've made in the last 25 years. As you know, we let a lot, they let a lot of the political prisoners out, and the rest will be coming.
Did you ask Marty McCary to resign, sir? Or did you fire your FBI
Well, I don't want to
commissioner?
say, but Marty's a great guy. He's a friend of mine. He's a wonderful man, and he's going to be off. And the assistant, the deputy, is taking over temporarily until we find. Everybody wants that job. It's a very important job. Marty's a terrific guy, but he's going to go on and he's going to lead a good life. He was
US
having
federal
some
budget balance
difficulty.
215 billion,
and he was having
215
some
billion.
difficulty, but he's going to go on and he's going to do
So
well.
lower than the expected surplus of
Everybody wants
220
that
billion.
job.
So the midterm elections,
Let me just check this really quick here.
Send the National Guard or ICE to voting locations in November. Would you do that?
Well, you know,
Oh, wow. That's impressive.
necessary to make sure we have
That's pretty good.
we have to have honest elections.
So you're not ruling that out?
A quick question. This month is considered to be the month of
That's good numbers right there. Way better than I was expecting. I was expecting this to come down because of a hotter print. It's actually a pretty good print.
Ceasefire is on life support. Is President Xi the person to bring it back?
Doesn't help the bear case. It's not what the bears want to hear.
And we're going to have a great meeting. We do a lot of business with China. We do very well with China, and they do well with us. And the relationship.
CBO estimates Trump's Golden Dome shield could cost $1.2 trillion.
To meet the Iranians, whatever he can do to help the The end of the war in Ukraine, I really think is getting very close.
China invest $1 trillion in the U.S. Will China invest $1 trillion in the U.S.?
When you're negotiating with Iran, Mr. President, to what extent are American financial situations motivating you to make a deal?
Not even a little bit. The only thing that matters when I'm talking about Iran, they can't have a nuclear weapon. I don't think about American financial situation. I don't think about
Trump says
anybody. I
OPEC
think
is
about
having
one thing.
difficulties.
We cannot let Iran have a nuclear weapon. That's all. That's the only thing that motivates.
Mr. President, will China invest $1 trillion in the U.S. or NATO?
Dan?
What is more broken?
NATO or OPEC? Well, OPEC is having some difficulty right now.
VIX 9-day being burned right now.
That has nothing to do with me. NATO was very disappointing to me. NATO was not there when we wanted them. We don't need NATO. We don't need NATO. But if we did need them, they just weren't there.
Trump says Iran will either do the right thing or will finish the job. And Trump further says, don't think we need China's help with Iran.
I don't think we need any help with Iran, to be honest with you. They're defeated militarily, and they'll either do the right thing or we'll finish the job.
According to 4 people familiar with the matter, Saudi Arabia carried out an unpublicized retaliatory strike on Iran during the war.
10 years creeping up quietly in the background. Heads up.
We're going to have a great relationship for many, many decades to come. My relationship with President Xi is a fantastic one. We've always gotten along, and we're doing very well with China. And working with China has been very good. So we look forward to it. As you know, President Xi will be coming here toward the end of the year, so that'll be exciting. I only wish we had the ballroom finished. The ballroom is right on budget and ahead of schedule, but I wish we had it finished now. You also may want to do one other thing. You may want to go see the reflecting pool, because that's under construction, and for the first time since 1922, it's going to work properly.
That's almost a near perfect fucking back test, man, of Thursday, Friday right there. That's almost near perfect. Like, we back tested Friday, we back tested Thursday here. Support's still in the market. My only concern here is,
Open up your north.
like, if there's anything bearish here.
As usual, the company is up to Starmer if you should stay or go.
Your oil in the North Sea and get tough on immigration.
Should he stay or go?
Europe is being very, very hurt by immigration all over Europe. Not
Should he
only
stay
him.
or go?
That's up to him. But I told him from day
Just check this 4-hour really quick.
open up the North Sea. You have one of the greatest sources of
Hey, I want to show you guys something. As soon as he's done talking, I'll show you guys something.
I think it's a great idea.
Mr. President, may I ask you 2 questions? Has there been any understanding between you and Putin that Russia should get entire Donbass?
There could be like a manufactured dump overnight. It's the only thing that I'm seeing here that's like dangerous to market. I just want to show it to you guys really quick.
That war is getting closer. Believe it or not, it's getting closer. And
Wait a minute, is 8? Is he including Iran in 8 wars? I can't tell.
Of your trip to China?
I think more than anything else, is we have massive relationships with China. We're the two
Just check one more thing here.
strongest nation on earth in terms of military. China's considered second. Who knows? I mean, who knows? But we are. There's nobody even to come close. And you see that whether it's Venezuela or whether it's
Here, I just want to talk to you guys about this really quick, so for positioning's sake, okay?
Iran the next US talks without 5 conditions met. So again, according to Fast News, Iran won't join the next US talks without 5 conditions met.
So I'm looking at like just a few things here in the background. So like one, I'm watching VIX 9-day here in the background, right? This is VIX 9-day. It wants to break out. You can see it. It's obvious, right? And think about this too from the perspective of if we want to go higher in stock market, bulls want to go higher. I mean, you can do spot up, vol up. I'm not anti that. That would be Iran war ends. Potentially. Or even cratering it down here if Iran war ends. A couple options here. But the bigger thing that I'm trying to get at here is if you wanted like a free and clear trade up into June and July, you would want the VIX to go higher, right? Does that make sense? It's like a bull would want to see like
With Xi mainly about trade.
you know, a bull like this is June, right? See June right here? So you'd want to like theoretically by the end of May, you want to kind of have the VIX up here so that you can sell it down into
Iran will make a deal.
June, July. Does that make sense? Like VIX up. That's the cleanest thing to do. The reason I'm bringing this up too is because I'm watching the 10-year in the back, like this whole Warsh thing, inflation thing, new Fed chair thing, new sheriff in town thing. Like I see this right here, like, okay, so market go up into close, but even if we just do the halfback trade, let's say into like 6 p.m. tonight, and then something happens overnight and this rips. Like this looks like it can rip in the overnight is my point. The greater point I'm trying to make. That would mean that I'm going to show you what it would look like here in a second. And this is just the bear case. I'm trying to get the bear case out for you. So like you have a little bit of weak VIX into the close, but then VIX ramps overnight. And the reason I'm bringing that up is because of two reasons. This is the 10-year yield. It's climbing right now. Even after that print, we're now up to 4.59. So if you were to see that VIX or that 10-year pop up into this like 5.0, that could lead to like a like some kind of like overnight dump. Let me explain this better too. So I'm watching this too in the background. Let me explain this better for you here. I always like a really fast recovery if we're going to get a recovery. This is a daily candle for SPY. And see where we are right now. I don't like the idea of closing underneath this level here. Okay? And I'll show you this on a 4-hour basis too. What it does, it opens the door for like an overnight dump, and we're down here tomorrow morning, and then it whipsaws up. The reason I'm bringing that up too is because of this right here, this 4-hour. If you look at this 4-hour right here. This candle was wiped. And this still implies that the buyers are here. On this wick, you expect the buyers to be here. I had that big green box down there. But still, this door is open here. Because this candle was taken. Theoretically, if we close underneath this here, you could like jackknife down into here and then up. It would look like that right there. And it would go vertical. It would be like you dump this in the middle of the night, leave the gap behind, close that gap up, and then be out of here. I can't for sure say this happens, but
AI is making billions to buy from suppliers.
This isn't anything to do with like Elliott wave or a little bit of ICT, but just it's candlestick counting in time and market. So just be aware that there could be a dump in here. I can't say that this happens, but it would look something like if we fail to close above this, it would be something like this, and then like almost near vertical up here. And this Thursday, there's Friday. They only have to be at this 40 here. So you could easily do this, right? So like you're up, you close this gap up here. And before you know it, you're kind of up there now, breaking higher. And then you're like sneaking up here, right? Does that make sense? Just be careful of this in here. or if you're long here, right? If you're long, make sure you can take that. This would be just a operation kill options before we get to actual expiration, rather than going higher. I would have liked to have seen like this here. Even doing this, I would have liked to have seen a quicker recovery to come up in here and then slam down into this. And we're not getting that recovery, so just note that there's potential of some kind of like a drop in the overnight. Maybe there's some bad news we don't know. I'm looking at it on VIX 9-day. I'm looking at it on 10-year yield. I don't have it as a high probability, but just it's noteworthy as we're killing the VIX down here in its close. There could be like some kind of a trap. I don't know if it's tradable, but just watch this stall. And what you want to, if you want to see it happen, it would look like this. This is 1600. What you would see is this stalls in here, and we get told no. And it would actually ramp after the bell and then dump. But in cash market, pinning it under here is the function inside a cash market. No fast enough recovery in here. So just be like conscious of a overnight dump. Only because we're not recovering quick enough, in my view. We're not high enough in the VIX. It's the only bearish thing that I see here. All right, so Trump is done.
We have put out both articles, some of the information on the feed for those interested.
Let me just look at the reports tonight. Maybe there's something I'm missing here. I don't see any like fucking huge. Hold on there. Let me check Oklo really quick. Hang tighter, guys.
A bit furthermore.
Yeah, that 10-year, man. Like, that fucking 10-year is telling a different story.
In late March.
Like, the 10 years in the background, it's telling another story. Like 10 years not liking the inflation print this morning. So we could get like a 10-year rip overnight, and that would flush futures. The close here is going to matter. Like, do we close above this stuff here? I'm interested in maybe taking a put on the close here. Hold on here. I might score some puts on the close here. It would have to be at the end of the day again. Like 4:15. We should ramp into 4:15. We should ramp into like 9 p.m. The 10 years precarious right now. Hmm. $13th, 19th, 22nd. There's OPEX of 25 May. Yeah, fuck that. Forget I said that. I was just looking for a reason for market to roll here. I don't see it. I'm trying to find like anything bearish here into OPEX, but carry on to the upside. This all looks good. I'm just trying in the background see if there's any like gotcha moments in here. Here's SPX. This is all following on track just fine. You see it? So we dump here. This is Thursday, Friday. Coming right back into. I was just wondering if there was some kind of like a failure to get up here. This pins us in. One more leg down, and then back up and tracking here. But it doesn't look like that. So it looks like it's going to continue on. And before the actual unclench to the downside.
Index pairs dropped to 0.5%, have been down as much as 1%.
We're good. I'll just keep watching this back here. I'm really wondering about this one at 7,400 right here. Like, does that dump? Like, see it? Like, this is the pin we think for Friday. So like, does this thing dump down here? And then we're just like, they're trying to like keep us from this 7,400. Like, this is the magnet for Friday. It's like up here, right? And then some kind of a like overnight doom. It's not really doom. It's just like dealers unloading to not print it until Friday. Being underneath it. But I think the way is higher. Let's go look at this really quick. For expectations. I'm just looking for any reason here. We're in a very precarious place. You can see it right here. So like this is fairly easy to see, right? So this is the pin for Friday, we think, or 740 is. That's up here. But before we get there, like this is 9:30 on the 12th. It's like the pin is right here. And that's basically where the pin is, right? So what you're doing is there's like a fake out in here, right? You close the market, maybe you push up into 9 p.m. and then they dump it again. Just to try to keep it away from that 740 into Friday. Look at this again. The week is a hanging candle, spinning top, indecision on the week here. This is why I don't like closing this low. I like the idea. Hold on a second, I'm getting blown up here. What sucks about this is, what sucks most about this is there's so much hand wringing here. I keep saying hand wringing, and when we're in trend, up or down. But we're in this moment right here. It's more. I like to call it hand wringing. Like a lot of the market wants this to come down for a multitude of reasons. Like you've got like the Mike Burries out there. They can't justify where we are, basically, right? No confidence, and they want to crash. In their minds, like if you come up this much, you got to give half of it back. Then you can go up double, and they'll scream the whole way, and then you got to give half of it back. Every rip must have some kind of like. So it's like hand wringing, like, and they wrote the thesis this week. And it's not like May can't be down. Like I see the May seasonality of a week back half of May. And you kind of see where we're sitting right here, right? Like on a daily candle, we're just like parked on support. It's like even right here, it's not that bullish. That was my only thing, was like you could slip over. Like if you can't get it done in cash market, then you do it in futures, right? So you just move markets down, right? Hit that one, close that gap, and we're out of here, or at least recovering or something. I don't know if we can do that though with OpEx. Like we're tied into this 740 up here. We're like
in the S&P 500 at the
you need an unclench, and like the unclench has to be triggered by either an event, either SOH or inflation or 10 years not happy, or Vixpiration would be a better one. Warsh maybe could be one. Vixie this time falls into next week. So you got the good leg down for this week, but the door is open down here. But I don't know if you've got the event to unclench it now. We're kind of like pegged into this OpEx to an extent. So let's look at this right here. I mean, look at that recovery. This is like classic bull setup too. This is all classic bullshit here. On a 4-hour basis, you've got this one right here. This here is a D. This one right here is red. Make them 2 red for the Bears. Then Jim James comes out and he mocks me. I'm not really mocking you. I just I feel like this bear thesis might be the weakest one I've ever encountered in a long time. It's like wrong time of the year. It's like coming into the strongest time of the year. It just doesn't feel right. So then the question becomes, is it a mechanical down move, right? If you can't get us where we need to be with legitimate reasons, material reasons, then you make up bullshit, right? To get us down there. Let's look at this again.
NYMEX WTI crude June futures settle at $102.18 a barrel, at $4.11 or 4.19%.
If we were to roll down here in the overnight, if we closed low enough, I could see the argument.
June futures settle at around $3.69 a gallon, and finally NYMEX natural gas June futures settle at $2.84.
Like right now, I'll tell you exactly what I have right now. So this is what we should do. I'm going to show you what we should do here. We should go up here. Just like this. And I'm looking for like way up here. I'm looking for something like this. And you see it like back here, like this, and then this right here. So like this should be We could potentially argue that right there, but and the longer that it takes, the bigger it's going to be. You want to call this into Friday? Whoop. Like even up there. Yep. That's like worst case scenario, like time wise at least. You could go with the other summation here where we close early enough. I'm gonna give you if you want an alt trade, it would be something more like this. If you like that cap, we're not closing high enough here. You could theoretically do this one right here, and then you make your way up into 7,400 on Friday. And even maybe something up here like this, where they're going vertical right at the bell on Friday. If you wanted this as like an alt trade, I think that's... I can't say that doesn't happen. What the headline would look like is that the inflation print was bad today, and 10-year is ramping overnight. The bond market's upset. They're not showing you how upset they are. In reality, it's just a 1, 2, 3 corrective move like this. Can't say that's not possible. For the bears, I do like the idea that the recovery is strong, but it's not that strong. It's not like we started ripping, like we back tested this right here, that Friday low, and then boom, we're out of here, kind of a thing. I would have preferred this price action to this price action. It's the only reason why I'm giving the alternate trade here. And I would expect that if you did this here, if we dumped into tomorrow, it would be an auto buy. Like we should go vertical. So I know it shows taking longer, but it would be an automatic straight up 9 a.m. buy. It's the only thing that I can see here, bearish wise at least. And that's because we opened the door to this trade this down here from the low that we put in. So anyways, the only thing I wanted to show you from here, I have us going crank. I still like the idea of this distribution here. 1, 2, we haven't lost this, right? That's good. Haven't lost it. So you would expect that we're going to make that last one and then eventually break down on Friday. This is what you'd expect, right? You're going to go up here, and then what you're going to do is you're going to get the unclench for OPEX for next week. And then you have the added help of expiration, I believe. You can get it started on Tuesday. And it helps with the idea of this. And then this also, if like Warsh is perceived as calming of the Fed, and if Trump has good news, this could assume that. And this is a pretty big move right here. So I'm just trying to give both sides for both. I know the bears want their case heard. It's like that's a 1.6% move, and time wise, if there was actually good news, you could theoretically say we printed all this right here because of something Trump said, and then we're back down into like Friday down here. We're like selling into Friday on some Trump good news on Wednesday, Thursday. So there's room for that to happen. Like you can see the market is accommodative to these outcomes. And this would be a 2% move up. And that fits the bill for 2 to 3% upside move if SOH ended or Ukraine and Russia ended. You can see that you can perfectly see that they've accommodated this potential. But otherwise, into Friday, anyways, I have us going up from here. We didn't give any of this up. Hopefully you bought the bottom with me with some Friday calls down here. So you're able to get this long in here. We timed it pretty well. The bottom here, we weren't looking at 10 a.m. Came on at 11:30, and we're just started looking to accumulate down here. And I think it's fairly good job here. So trade is higher. If you're a member, you already know this. You guys already get updates, expectations and stuff. Seems pretty like run of the mill. If you are looking for that unclench, like this big downside end of month doom or whatever, you may not get it. You may not get it until next week. Like, could start Friday close or something, but like even if they're nailing this down, they're still going to suck us back up in Friday. Is my point? If they send us over, they're going to try to suck us back down into it Friday. That's my thought here, is that the pin is somewhere in here. And thereafter, though, you can try again if you're a bear for that unclench. The downside, right? You break this into the Monday, Tuesday, and then Tuesday expiration. Now you get your ramping VIX, and then that sets up the bulls for, bottoming action and then a ramp into June and July. So you might get stuck just waiting, is my only point here. This is the expectation right here. And this is like a 1, 2, 3 right here. This would actually be 1, 2, and 3 that works, or you could call this 1, right? 2, 3 up here. You'd take out this high, and then you'd get your roll up here for your fifth wave. There's a couple of different ways to read this. Just on the bear side of things, like just for the bears, like not to shit on bears. I know you guys think I shit on bears, but you have this going for you here. I'll say like you've got you got 737, and the bulls need to hit this number up here too. The bulls need to hit this to unlock these highs up here. Like even if they're failing this, they gotta like take this out. They got to hit this one. If they don't, they get sent back down. They get another chance right here. And the bulls need this. And they truly needed it earlier today. Though they need to be closed. In my view, I think we should have been up here on the close for the most bullish outcomes. So if you're a bear, you do still have a chance to send these guys packing in the overnight here. Maybe if you're long here with cash market, right? If you're long with me, cash market, maybe you just watch tonight's overnight and hedge the trade in futures in case you need to. If they do start selling, it should happen at 9 p.m. Once we're out of U.S. market, we're in the Asian markets. You'd see this at like 9 p.m. tonight. Go back and look at and here's the other side of this trade right here. Notice how there's no notice how there's no 1 hour marks down here. It says the same thing. It's saying the same thing I'm telling you, which is if there was anything bearish here, it's the fact that we have not gotten above this white line. So if like we stall in here in the overnight, straight back down again. You're taking this one out before you know it, you're looking lower. Just be aware of that. I don't normally give you like what I think is going to happen and tell you, well, there's an alt trade here. I just want, and this is where the hand wringing comes from. We're likely going to do this hand wringing for like the next 2-3 weeks. There's going to be a lot of like, oh, are we going down? Or are we through it yet? And I still want to impress upon you what I said to you in late April. I said to you, the biggest thing you can do for this month is find the monthly low. It is like May monthly low is like the key to outsized gains for June and July. Like, you can still get great gains for June and July, but if you're looking for like that swinging that baseball bat twice a year, and you're looking for like that, you know, like you're looking for that fucking home run that's like over deep center field, hits the fucking streets, bouncing down the road, smashing the light bulbs out. That trade, if you're looking for that, like that, I found the monthly low trade. I still think it's lower for the end of the month, but I think it's like sweeps that April low. But the hand wringing is like the time. Like from now into end of month, there's going to be a lot of it. There's going to be like, is this the low? Are we breaking out? There's like this other count that I've got for you here to go down in the overnight because we didn't get high enough. Like that stuff should clear up once we get closer to the new month of June. It's going to literally be like everybody's on vacation. You got to remember, like, end of May is like Labor Day weekend. People start hitting the fucking beaches. They fly out of New York City, and it's like cruise control. So, like, these New Yorkers, like, the street is looking for that, like, get it as low as I possibly can so I can put a trade on and forget about it for June and July. Usually that's what it is. Laptops open during vacation. It's not the norm. We're not in a bear market. So unless they create that between now and then or something, I don't know. Or they try to it looks like they're manufacturing this. So like we're manufacturing this down move, and I need it to be, it's worse than it actually is. You know what I mean? Is that something that, like, is this inflation something that is material? And so far, it's not looking like that. So, I guess my ultimate point here is that for all this like manifesto stuff, you come back on like fucking May 29th, and all of a sudden the fucking manifesto is cleaned up. Like, it's not as bad as we thought it was. This isn't as bad as we thought it was. This isn't as bad. Or it's something we can kick the can down the road for the fall. Or we want to see more data. We're data dependent on this data, that kind of shit. All the data looks good. Even for the bad data, it's not that bad. It's like manageable. It's not calling for like a hammer down on any of this kind of stuff. And you have to be aware of that, because if we're still in the bubble, right, this fucker starts running, and it's gonna run. It's gonna be like you're looking for a reason to pop the bubble, and in fact, everything is okay. So you'll get manufactured downside moves, the hand wringing goes away, and then all of a sudden the market's just like exploding and running to the upside. And these bulls are going to be in here buying this too, right? There's no fear out there right now. There really isn't. I see the distribution, but how long is your case? Like, you got the case of OPEX, you got the case of expiration, you got the case of Warsh, you got the case of SOH. And if you knock all of those things out here between now and end of May, and the street's going on vacation, where's your summer of everything's imploding? And I do realize that we're at like peak Strait of Hormuz doom. I read some things yesterday after the show. I read what was being spun to the masses. And what's really shitty about that is I watched a show from Forbes yesterday, and this reporter did an expose on the damage that's being done. And all I could think to myself was, this reporter likely has access to a Bloomberg terminal. This reporter likely knows that we're tied into OPEX and that we're going to have some kind of an unclench to the downside. And so, like, from her perspective, when she's writing this article, she was writing a lot of doom shit. But she knows that the data that she has disagrees with that doom shit. but that once we unclench, or if we unclench, let's say we roll down, right? Let's say we roll down here post OPEX. We come into like Friday, right? So she put this story out about Strait of Hormuz, right? So you get like this, let's say you get this, like, we're up here, right? Squeeze. We get sucked back down into OPEX. Let's say, and let's just everybody just agree that it's at 40, okay? Even if it's not, just pretend it's at 40. So we come in here at 40, right? We get more unclench on Vixpiration, right? And maybe we get some more bad news of some kind. It's down here. It's horrible. Like, worst case scenario, it's down here, right? Now, she's fulfilled what she needs for her story. You understand? Like, she wrote a story. It's the doom of SOH. And she looks like she's correct. But no one's going to remember her story in June when we're cranking. And you're not going to care. You're just going to be like, oh, my God, she was right. The lady from Forbes or whatever. So, like, it was a vehicle used for the unclench only to print, like, this downside move that's kind of inevitable. Or, like, at least the unclench to some extent is inevitable. Not the depth of it, but... and she walks away for the next story. But meanwhile, you're consuming that. And you're left with that imprint in the back of your mind. And it clears up. And all of a sudden, June and July are like party time again. So you're like left holding a bag of doom from SOH. Like, SOH is not as bad as it looks at the moment. Believe it or not. And the market is still under the premise, as you heard Goolsby admit to earlier, which was good, a breath of fresh air to hear, that the market is still operating under this assumption that that there'll be some kind of resolution. And it's also fascinating when she wrote, or she made it was a YouTube video for Forbes. What else is fascinating about the article was that, or the expose was that, she wouldn't acknowledge that that the street is still looking through this stuff. And she also made it out to be that China has no incentive for a resolution, and I think that's 100% false. And China has a history of pivoting in this kind of confrontation in the past. With this, these economic and changes that have been going on around the world, they've adjusted rather than retaliated. So, there is an alt down here for tomorrow morning for some kind of like overreaction from the 10-year. It would be more of a mechanical thing for me, at least. I think it would recover, so you could add to your position for Friday. But the outlook right now is still squeeze up. And the bear thesis is kind of waning already this early. Is my only last caveat here, which is, you're up here and then you're down here and you're like, how, like from 750, what is the corrective move? Is it 300 points? Are you trading 720, 730? And that's where we are right now. This is a low of 732. So you're just expecting to be down in the 20s. There's a lot of fucking hand wringing. A lot of drama for 2 weeks. Is the only greater point here. So we have to go through this bullshit now for the next couple weeks. I think that we're going to deal with this for at least 2 weeks before we got a clean exit. We do have to clean up this bear thesis. And I'm not anti this like roll starting earlier or something like that, or I'm open to the idea of a crash too from Bari, but not bear market, or a big correction. But I don't see it right. I don't see the makings of it at the moment. I think you needed more progress this morning, like like if you had a really heavy hot print this morning, like way out of expectations, you could make that argument. And I think you needed like more damage today, like deeper today. And then I think yesterday in the Discord, what did I say to you? I said the target for tomorrow is 732, right? And in the close yesterday, I posted it in Discord. I said the target tomorrow is 732. I think I posted that in the pro chat. And we hit that number this morning, right? There's 732 right there. So if the expectation was 732 yesterday and to this morning, we didn't trade outside of the range of expectations for today. And I think for that like crash behavior, you need the markets on that trade, you need everybody on that trade, you need the sentiment on that trade, you need the technicals on that trade, you need the fundamentals on that trade, you need all the reasoning why. And I think what people are doing is they're consuming the reasons of why this should happen. And then when the data comes out, it doesn't match. So like this lady who did that thing yesterday about Strait of Hormuz, it's a vehicle for her to sell a newspaper and not the truth. Is what I'm trying to circle back around into here is you and I are positioned for this crazy town, and then when the data comes out, it doesn't match. And it doesn't match what these people are saying. They're trying to sell us newspapers, and they're not necessarily aware of the data's not as bad as it seems. And I think some of that also is valid here with Strait of Hormuz in China this week, where it is actually in China's best interest to reopen the Strait of Hormuz and get the fucking material out of Iran. Yeah, I'm trying in my head to go through all these other options here. You know, it reminds me of the argument like I don't know, I hate Trump, right? I hate Trump and fuck the US. Don't do business with the US. Right? And in reality, the US is the premier country to do business with, even today. For other markets. Whether you like that or not, whether that makes you angry or not, or you don't like the current regime or whatever. You know, and on the same topic, right? Like the UK yesterday signed a deal with Palantir, right? To give up NHS healthcare, right? And then there was another story yesterday where they shit on like Microsoft and Google, which was probably how they were going to shut down information sharing with those companies, which was probably part of the deal with Palantir, shit on those companies. But what's fascinating about it is you have like the noise of like people from the UK saying, we hate Trump and we hate this and we hate that, and we hate the policies. But then you're fucking signing up for Palantir. You're doing the fucking thing that you're saying we shouldn't be doing. Do you understand what I'm saying? So the only reason I'm trying to relate this to markets is you got to be careful as to what you're consuming about, like the Strait of Hormuz or Strait of Hormuz with China. You know, like this meeting with Xi, like that mentality that the U.S. is fucked when they're going to meet with Xi. And I don't like Trump at all. I didn't vote for him. I don't vote for him. I'm like a hardcore liberal, but I have to like trade the market in reality. And it's hard for me I find it hard because of my politics that I don't get poisoned with how it interacts with the actual market. Does that make more sense to you maybe? Like I got to literally hang up my fucking Main Street hat and put on my trader hat, and my trader hat does not fucking agree with my Main Street hat in any way, shape, or fucking form. Like my Main Street hat is like, this should all fall apart, and fuck how we're doing this is the wrong way for this, wrong this and that. And then I get poisoned, of course, from from the nipple, right? Like you'll see like Republicans, Democrats, MAGA, like everybody's got a nipple, right? Oh, I'm going to go to Truth Social and suck on my nipple. I'm going to go to Blue Sky and suck on my nipple. I'm going to go to here and suck on my nipple. And you know what I mean? It's like, it ain't fucking easy. So when you look at this like she stuff coming up down the pike in the next day or two, this is fucking set up for, some kind of good news at least, even if you don't agree with that good news or you don't think it's good news, you think it's going to fall apart or, Trump's going to fuck it up or whatever. The market is a whole different thing. You got to separate that shit. You know what I mean? It's not easy. Anyways, into this close. The contra trade right now, because we're doing so much hand wringing, is down really fast in the overnight, like 9 p.m. Sell this fucker because we're not above this stuff here. I don't like this. I have a safety issue here, and I want to show you something else. If you guys ever watch the trading videos, right? What do I tell you guys about these trading videos? If we are recovering on a trigger, right? Do you see this weekly or this hourly right here? What do I always say about this? Anyone remember? It doesn't matter if it's a daily trigger, a weekly trigger, a monthly trigger, an hourly trigger, a 5-minute trigger. It really doesn't matter. But if we recover here, what do I always want to see before getting long? The two new highs, right? I want to see like beat the high right here. Right? Take this one. Even if it stops right there, and I feel way more confident taking that long. So like you're right here anyways, right? We're already right here, and you just like you want to see this before you're like, oh, fuck yeah, bulls own this shit, right? It's the only caveat that I have here in this close, that we have not seen these two new highs, right? Above the trigger that we recovered to. So it's the only thing that I've got there. And in that case, that's why I'm saying, we had that potential, that downside move. There's still that risk in here. Just be aware of this as we move forward. Just be aware of it. I'm watching it here. And this is the hand-wringing part. You want to be like, you want to be the guy that's like, oh, I'm long here, and I took all this, and I took all that, and I took all that, and then you come back and you wake up tomorrow and it's boom, see you later. There's your, fuck you right there, fuck you right here, took all your stops. Oh, now I'm right back up again. You know what I mean? It's like that, just like clean you out, and then the real move happens to the upside. So just be aware of it into tomorrow. And it's more a function of where we are in time and, the whole process here of trying to cool the market down. You get to also get the VIX up and stuff like that, and reserve and function here. At any rate, let's go back down to a 1 minute here. We'll run with this as the premise that it's up. It's a nice little pump up. Let's watch that VIX 9-day too. VIX 9-day still getting taken to the woodshed over here. Nice little bottom down here, right? Come in here, 12 o'clock, buy that fucker straight up. Bear's going to have to go back to the fucking drawing board. And then, what the worst part of this is, too, is like, there could be like a Vanna rally. It could be like a Vanna rally and stuff. Oh man, like fucking Bears, dude. Like they can't win. They can't fucking win. There's the next 4 hour up there. We are bullish on the day now. We're coming over the day. It ain't easy being a fucking bear in this time of the year. If you're a bear out there, right, and you're listening to like Barry and shit, and like there's a huge narrative we're gonna crash. Like it can't be easy. Like I would be down with your thesis if it was like fucking like January, February. If we hadn't dropped by April 1st, I'd be like, fuck yeah, those guys are right. If it was like mid-July, I'd be like, yeah, let's start listening to these fucking bears. They're gonna be right here shortly, but just because we're as high as we are, just because it's the end of the bubble. I would here, let's take a look at something really quick. Let's take a look at something. I'll show you guys something neat. I think. This is IXIC. We're gonna switch to a day here, and I don't know if you know this or not. If you're a young trader, you may not know, but like in the 90s, they introduced new S&P products, new NASDAQ products. You ever see the buttons? If you ever have a chance, look up on Google Floor Trader Museum or Chicago Mercantile Exchange Floor Traders Museum. It's really neat. They have a museum. You can see all of the old pins and shit floor traders used to wear. And when they like launched QQQ and SPY, those are products, derivative products of the S&P 500 and NASDAQ. And prior to 1999 and 2000, we didn't have the QQQ. I don't know if you know that. I know old guys here do, but if you're a young trader, we did not have the SPY nor the QQQ when we were in the first bubble. So those old guys, they used to track IXIC. This is the NASDAQ composite. The reason I'm bringing this up is because of this. Let's go back in time, and we can actually go into the tech bubble. And this chart in particular does a wonderful job. You know, people are hand-wringing over RSI. This chart in particular, its velocity does an amazing job here of showing some interesting things where other charts don't show this. Like SPY shows a divergence on higher frame velocity, like on this hourly and on this monthly and on this quarterly velocity. But on IXIC, it does not. On IXIC, it actually shows the run up to the top. You can see the accumulation on a weekly basis here, and then the accumulation here, and then the bigger accumulation here for the top. And you'll also notice they blew off a bunch of velo here in 1998 on a monthly basis, and then they continued to accumulate it on this monthly. And you can also see it inside of here. You can see these small bumps on these highs. This is minus 124 in here. I'm going to explain to you in a minute why I'm raising this. I want you to remember this in particular, okay? And fascinatingly enough in here, too, you can actually track Qs in here. And there's this big, big peak in here. Do you see this? This big, big, big peak in here. And we still ran on this divergence on daily of velocity on weekly. We maintained on weekly. So you want to remember the weekly velocity is critical here. Like critical. So you lose it here and we start to melt up for the end. This is 1999. Right? So let's go take a look at this right here. And this right here, and then this right here, and this right here, this one right here. This is actually starting to show the top, right? It's like peeking out on this one right here. Let's go over here and look at where we are right now. And what's fascinating here? We're not quite at peak on daily, but it's not reliable. It's not reliable, is it? At least historically. And if you look at these three down here, we're not at tops, are we? If you just look at these three right here, we hit the one top back here, but we did the same thing, didn't we? In 1996 or something, right? And then we were accumulating again in this higher weekly. Let's go back and look at this again. So do you see how we hit this one back here? We actually hit it back here too, right? And yet we're not at the top over here. We're not at the top over here, right? Say yes, Captain Jim James. So so when you're looking back over here, if you wanted, at least from the sake of velocity, we have not seen the top yet, have we? You would still want to see this velo get up here. You'd want to see this velo hit up here, and you'd want to see this velo up there, wouldn't you? Right? You could potentially even set an alert. If you've got triggers in velocity, you could set an alert for all three of these triggers, the quarterly, the monthly, and the weekly. And if you were going to like ponder, not like, move, violence down, move up, violence down, like the Bari, we're going to crash, bro. But I'm not going to call a bear market yet, right? Just in case we do this, right? If you wanted like a when is the top, the actual top of the market, if history is any guide for running the playbook from that time period, you could theoretically like set an alert right here, add an alert on horizontal line, velocity crossing up, create it. You could create a line right here, add an alert, velocity crossing up into the line. And you could do one more right here, add an alert on horizontal line, velocity crossing up. Save it. You could even make a note on the alert saying crash warning or bear market warning. And make a note on the alert that says, I'll remember it, but if you can't remember it, if I see an IXIC alert, I already know what it's for. But if that IXIC, if you see all three rattling off at the same time, and, the stank market is up here, maybe you could heed that and issue a warning and say, we're in top warning now. And if the time of the year was right. Anyways, this is IXIC, and this is just meant to dispel some of the crash noise that you're hearing from Bari. Bari more than likely is, I guess I am getting people excited. It's turning green. Bari is more than likely getting this wrong, and he likely can afford to get it wrong. Because if we're going to crash up into the end of this bubble, there are going to be large drawdowns. And he could say, well, I closed my short we're going to squeeze again, and I'll be back again for the next one. And he might not tell you this publicly. You know, these guys keep their shit secret. Like their special sauce. So they verbal or they use special not special words, but I only say this, but not the other thing. You know what I mean? Because he's eventually going to be right. I think we can all agree on that. Eventually, he's going to say like this crash will become a bear market, and from what I can see, we have not hit it yet, and we more than likely will see big all-time highs this summer. We'll likely see even more bigger monster all-time highs in March, and we could literally trade sideways for an entire year. And I don't mean like 2022. I mean like sideways. And like come back for a new all-time high in end of 2027 and fail it, and then that's when we start to run to the downside. Like when the bubble starts to implode on itself, it could be like late 2027. Like maybe the real top is March 2027, but you could see that high revisited one more time in 2027. And then the bigger unclench for the bubble pop could be like, you know, late 27. And then you're talking 27, 28, 29 down years. And then your generational buying opportunity doesn't come into play until 2030, 2031, 2032. And we're in 2026. And we got some time ahead of us. Like when you're talking about time, you know, like you got Barry's like, you know, the bubble's gonna pop right now, and it's like, whoa, gunpowder. Like this shit could take years. Like slow the fuck down. Or are you saying we can crash or like have a heavy correction, but only in the service of more bubble, which is more than likely what he's saying. He's giving himself an out because you're interpreting it as the top is in permanently or this bubble, when he's not saying that. He's just saying there's a high probability of major corrections every time we make these monster upside moves. And velocity is not agreeing with the top being in. And where you can't check this on, you can't check it on QQQ. I can't check it on SPY. If you look at it on SPX, it doesn't give a clear. It doesn't. There's a lot of divergence on SPX. You can see the divergence in the street selling as we go higher. You know, you can see it on SPX that they are selling into bag holders, but how long does that take? You know, that's a huge ass process. Keep squeezing up there. Keep going up. Go up there and slap that fucking high up there. Slap that 737. I gotta check. Hold on a second. I gotta check my account here. Here's your next chance to get out of your calls if you want to. This is the next bus stop up here as you come into this red line in this gap. Yeah, James, I'm with you on that. There's a window where you run it hot. I said that on Twitter this morning. Like, you can't, like, you literally can't fucking get that inflation print, James, and expect a hammer from the fucking Fed. You just can't. It would be, you're not doing your mandate. Like, you can get a 25 BPS hike, but like a regime of like like we're moving into a tightening regime right now, like full on tightening to fight inflation. This inflation is not fucking COVID. So like when you're looking for that like draconian Fed, I don't think you can get that. I just saw your posts in there. I just went back into the Discord. Anyways, when you're hearing this like shit from Bari and others out there, when they're telling you like we haven't seen this since the bubble of the 90s, and we're way past it. We're not past shit. We ain't past shit right now. And I'll tell you what, like velocity, I've never, ever seen a better indicator. Not one. Not ICT. Well, it's like a dumbed down version of ICT, but it's based on ICT. It's based on accumulation distribution too, like Elliott wave over long periods of time. But if you really want to see like accumulation over years, you use velocity. It shows how they accumulate over time for like decades, and then how they distribute over time and on different time frames. And I'm not seeing it right now, so I'm not seeing what they're seeing. Either they're not saying it publicly, or they're just keeping it closer to their chest. I don't know what it is, or why they don't know, or why they're not pushing that narrative, or maybe they just want a better price or something to get long into June and July. Like they're telling you and I one thing, and then on the other side of that, they're just looking for a cheaper entry for the summer. Congratulations, it's Chopsticks. I couldn't buy puts yesterday in the close. I ran out of here for a doctor's appointment. I wanted to buy puts at 414. I didn't get a chance to buy them. I had some calls die into the close yesterday. I'm doing well right now. I'm staying long into Friday, so I'm not selling. I'm staying long. Same trade as last week. Is this our May low? I don't think so, but I don't think this is the May low. But like the time they want to get it done, I think they're waiting till next week. I don't think they get their unclench. And you know what else is fucking crazier? That window leaves too. Like if you want to call, like, is this the May low? We would know next week. If we get past if we get past expiration next week and there's no downside unclench, that was the May low. We'll know by like Wednesday of next week. Like this book they're writing right now has a fucking the last chapter is like Wednesday of next week. Like there's only so much time they can turn those pages and claim that there's all this like doom. They're going to need like an abject failure from SOH. They're going to need Vixpiration. And even then you'll get sucked back up into the OPEX price. Like the Vixpiration thing, like that's like a 1 day done and done thing usually. I'm trying to find some answers here for bears, like 10-year overnight tonight could dump the market. SOH falls apart. Vixpiration. Out of control inflation. Warsh. But Warsh needs a reason to be that hawkish. I don't see. I mean, I could see 25 BP, but that would be it. You know what I'm talking about. You want, like, I know what you want. Like, I know what the fucking bear wants. So bear will lie to you. They'll be like, we just want the 25 BPS, you know. But in reality, you want fucking, you know, the whole full fucking point, right? Full QT, fucking, you know, beat the bulls down, slam their head in the mud, you know, fuck the AI build out, you know, straight up Hormuz implosion, U.S. warships in the bottom of the sea, you know, the whole thing. You know, China's better than the U.S., though, all of it, you know. Private credit's dried up. Americans can't afford higher gas. They can. I don't want to say that. I know that you're going to hate paying the higher gas. But can you absorb it for like a month? Can you absorb it for like 3 weeks? Probably. Are you going to whine and bitch about it? Yes. I already am. I bitched about gas this week. Matter of fact, I got so fucking angry this weekend. I was angry. I was gonna do brunch on Sunday and canceled my reservation. I was like, I did not want to deal with the amateur diners, and I did not want to deal with a bad meal. So at the last minute, I canceled. And I woke up Sunday morning at like 5 a.m. and got some coffee. And then I went down to my local grocery store and I picked up brunch stuff. And I wound up cooking brunch for my wife and kids, made them. They always like béarnaise sauce and hollandaise. But I don't make it anymore. And everybody fucks it up. I don't know why. It's not that hard. It's like really simple. So I made them brunch on Sunday morning, and I went and got in the car, and I jumped in my daughter's car. It was behind my wife's car, so I jumped into it, and the car was on empty. And so I was like, God damn it. I was like, how many times do I tell these goddamn kids never leave the car on empty because of the fuel filter? And, I'm the grouchy old man, right? And then I went to the gas station and I filled up. I was like, fuck this. I was like, no wonder it's on empty. She probably goes to the pump and puts in her gas thing, and she's like, oh my God. So it's painful? Yes. Can I afford it? Probably. It pisses me off having to pay it. If I was poor, I would assume that this is really hurting the most impoverished, like the bottom 15% or whatever. It's got to be brutal. It's got to be fucking brutal. If I was in the bottom 15% right now and I had to deal with that gas, man. But again, that's not the economy, is it? Like with my Main Street hat on, I know people are getting fucked. But I know that those people don't drive the economy either, and they don't drive the market either, do they? Well, they do through the sweat off their fucking backs. The world does need janitors. I agree with that statement too. I think they can live together. And I have no ill will towards someone that is in the bottom 50. I've been there. Just to say to you guys, I've been in the bottom 15%. My kids have put me there. I've lived in like really nice places with kids, and it's not cheap. It's like the rat race that we get into, where you're making all this money, but you're still the working poor. But again, it's not the economy, and that's the other thing. You gotta see that, like the gas thing, for what it is. Like, is the gas painful? Yeah. Do I not like the gas? No. But I gotta remember that 85% of you can absorb it, and that includes me. I can't absorb it. Am I gonna bitch? Fuck yeah, I am. Am I gonna be mad about it? Fuck yeah, I am. But at the same time, can you absorb it is the different question. Can the market? And the market knows if you can absorb it or not, and as of right now, you can. And you're gonna get angrier and angrier about it. You're gonna get more vocal about it. Like, if there's one thing, do you ever notice how Trump blames Biden for inflation? The reason he does that is because everybody hates inflation, and if I can tell you it's Biden that has created that inflation, it's all his fault. And if I say it over and over and over and over and over and over again, it helps me as a candidate. Does that make sense? And people hate it. So if they hate inflation, it's like an easy stump speech to make. It's all their fault. The truth about inflation is most of it is cyclical. But they're not going to tell you that. Like, Biden's not going to tell you that. Trump's not going to tell you that. Obama, Clinton, I don't give a fuck. Vance, doesn't matter. None of them are going to say that to you. They're talking to some asshole on Main Street that doesn't care. They're just pissed off the gas is high. Personally, I think most of it is cyclical. And I think they can thwart it or they can like blunt it and stuff and work on it and like impact it. But the cyclicalness of it, I don't think it ever goes away. It's like natural inflation and natural greed cycles, natural business cycles, natural constraints on available goods and services when you're cyclically going through a business cycle. Trying to break up here and close this gap above. If you want to step off into this close, I don't see why you can't. Remember the 2 new highs we don't have. If you want to stay long into this close and get out and then look for the back tests after, you can do that too. In case we do flush overnight. There is potential for a flush overnight. VIX is showing it. 10-year is showing it. The failure to get above this zone right here is showing it too. Yeah, gas prices. I mean, and let's think about gas prices. It's something that's always been traditionally low, right? For like decades. It doesn't follow the same inflation path that the rest of inflation does, right? It's its own kind of a thing. If it followed the path of inflation for most goods and services, it would probably be $20 right a gallon right now, or if not higher. And in Europe, they pay more for gas than they do in the U.S., right? Pound for pound or liter for liters to gallon. They pay more than, but they also get more services for their taxes too than we do. Then you got to go to work, right? There's no way around it. Yeah. Sorry, I'm reading some of you guys' comments. Let's see what this is here. I think the biggest, the reason I'm saying this to you guys is because the last caveat to all of this is if we do get an unclench, let's say we get an unclench next week, let's say we roll off 45 or 50, right? Let's say we fail 748, 50, we roll down and we're blooding to the downside. Don't spend too much time hand-wringing over why that is my point. So the thesis that they're writing, right, why we should crash and why the bubble should pop and why it should be right now is not fucking based on anything that I can see. Anything. So there's either something we don't know, there's something we can't know, or they're just fucking lying to you for a better price. So you don't want to be left behind in that. You know, whether this is the bottom or we do this unclench next week and we start going into June and July, as long as you identified the bottom, you're ready to go up and put a big, nice, fat, long trade on and make the best money of the year is the point. And you're going to look back on these lows, like even here at 32, if you're looking at 32 and 22 in July, that, like, write this down. How about this? We just traded 32, right? How about at home? If you're at home right now, set an alarm for yourself for middle of July. July 16th. July OPEX. Set an alert for yourself and say, Jim James said to me, you're not going to remember 32 or the low before, if we go any lower, when you come into middle of July. You're not even going to think about it. So You know, whether it's 32, 22, 7,000, you're not going to care. You're just going to look back on this and go, holy shit, look at how high we are. And I'm printing a bunch of cash. So if you don't get stuck inside of the drinking the Kool-Aid of this bear manifesto, you'll be fine. You pick a bottom, you put on a big fat trade, you'll make a bunch of money. It's like a fucking softball trade. Swinging the bat on a low. You're coming out of earnings with companies that are getting hammered, right? And they got to build up for the next earnings season. You don't have to care if they print in July. You're like buying them right now. You're getting in early. You're getting long. And you're not going to care about where we are when it comes to July. If you don't drink the Kool-Aid, you realize that we're going to put a low in for the month of May. And you're going to come into the two most bullish months of the year. And this inflation print today was not the one that they wanted for that manifesto. Thank you for coming to Captain Jim James bull psychiatrist appointment for today. Thank you for looking at the bottom with me this morning or this afternoon at 12 p.m. Hopefully you got long for OPEX. These watermelon prices are getting crazy. I bought a watermelon on Sunday too for brunch. We did brunch on Sunday morning. I made eggs Benedict, and I made this really thick cut bacon, and then I made English muffins, the whole thing. Make English muffins, and then get up there, squeeze that shit up there. More progress into the close. Target hit 737.72 up a low from 12 p.m. We were looking for buyers or sellers down below earlier. I paid $1.39. Oh, yeah. We're up $1 right now for Friday calls. More. I'm up more. $1.39. They're at $2.90 right now. $2.91. 740 C's for Friday. $2.89 now. You can get off here if you want. If you took the long from the bottom for calls for Friday, they're doing very well right now. Hey, you're welcome, Galadriel. You can get off the bus here if you want. I'm losing some value here. I'd say once we hit 40, get out. If that's the pin and they drive us sideways, Freddie, you just get out at 40, man. You can always like sell 45 or 48. Let me see if there's any earnings that look good tonight. I don't think I saw anything, but I'll just check earnings tonight. Like Oklo. A lot of the earnings yesterday did the thing, didn't they? They all popped and then dumped. Oklo doesn't look as much like that as the reports from yesterday. I like KRM here too, but they look like they want to dump too. Like KRMN looks like they want to go up there and trade 73 and then sell for a later rip higher. I like Carmen. They report after the close today. They look like they have more resistance than Oklo does. Oh, nope, wrong one. It's like the same setups all. This one, like, Electromed has that same bullshit, like, you know, this is Electromed. It's got, like, you know, this kind of fucking nonsense. Like, you report, and then it's down, and then it's up, finally, the breakout. A lot of reports yesterday looked like this. Let me check. The other thing, too, is I never looked at the... Just see a few more things here. So, like, C reported this morning. They look like they want to break out. Keep an eye on C. SEA. I'm saying that because C normally falls into line with JD, Baba. Those still have reports this week. We have a bunch of China reports this week. And C looks like it wants to rip faces off. Take a look at SEA really quick. If you're at home, take a peek at C. It looks like a quick rip overnight. Let me just check Cisco really quick. Cisco is Wednesday after the close. My God, look at that. Jesus Christ, Cisco. You beautiful, beautiful beast. Right on $100. I actually want to short Cisco on Wednesday. Cisco just traded into $100. I have them charted right now from May of 2025, and I've got them going to $100, and they just hit it. Jesus. 1, 2, 3. So this is 1 right here. 2, 3, 4, 5. They're on 5 right now. Cisco's on 5, their 5th leg right now.
Apple plans customizable camera app aimed at pros in iOS 27. Apple changes part of the iOS 27 update set to be unveiled June 8th.
This is where I've got us going to right here. That's the first leg. This is the second one. See all that half-hour trigger coming up right there? Closing the gap. You see the gap over here? The gap's being closed right now. Tighter, guys.
1 minute remaining for the market on close imbalance.
At least you didn't lose money, Giordalino. We all got long down there. Oh, your gas is under $5 still in Florida?
10 seconds.
I always found it weird how I paid more for gas where they were refining it. I always thought that was odd. I had to drive to like a gas town in Texas, and the gas is always expensive. Whoop.
Market on close imbalance. S&P.
There you go. There you go. There you go.
100 buy side 1.2.
Don't worry, I just told them on Twitter that they got to wait until post OPEX on Friday.
7 buy side 800.
The bear thesis is dead until Friday close. Their fucking window is Friday close into Wednesday. The Bears have to come back again on Friday. I know. Oh, I do that every Friday. I give back money on Fridays. I'm like, I just want that last squeeze up. I give money back on Fridays. I do that all the time. I get roped in every Friday. I'm like, I made money this week. I got to give some to the internet gods when I shouldn't be doing any of that. Markets on close and markets on open. Moo and MOC. Yeah, keep going up there. Close that gap up there. We're getting close to the roll. I want to see the tick, but I think they're going to fail us up here. I don't think we take that tick out. I think we fail it, and then we go back up and take it out. If we take this out right now into this close, if you're a bear, watch the fuck out, okay? If we take this out right now, if we just touch it, that's it. All we got to do is touch it. I don't think we're going to. I think we're going to fail like right below it. I think we're going to go like this. Just like that. But if we do touch it right now, the look above, the peak up, this early, then watch out because the next one's going to be a doozy. I think I would get out right here. This is like a no-go line for the Bears. This does not bode well for Bears. It opens up a Pandora's box to like 48. I mean, I think we're going to undo it, but I think they're initially going to try to sell it. We're going to touch it today. I don't think we touch it today. I think we touch it tomorrow. I think we're going to save a little bit of juice for SOH. Unless they're going to front run it. I think you should be... I think on SOH you should be more... I don't think that China wants to fight. The reason I think that China's going to be a little bit more placated or wanting to see some kind of resolution is I don't think they're ready to fight the war yet. I think they will be, but I don't think they're ready right now. And we're kind of out of season, I think, too, for it, aren't we? I think we're getting out of season right now. Like, when's the windows to attack Taiwan? I thought it was like two small windows, one in the spring, one in the fall. No, there's like two windows. There's like a window on, it's because of the sea state. It's like a springtime and fall, I think. I think it's like a 1 or 2 month window in the spring and 1 or 2 month window in the fall. And then this is not the right time to be invading. I don't think. And they're not amassing troops at the moment that we can see. So I would think that they're going to try to get the strait. The strait being closed does not hurt us. It hurts China. no matter what they're telling you. And no matter what they're trying to talk about, like they got all this oil storage. That shit was like 2-year-old. Let's see if we hit this or not. I don't think we're gonna go over it. I think we're gonna reject it, and then we have to fight to get back up there. We're gonna need like probably the half an hour trigger crossing to push us over. I could be wrong, but I think there's probably like an 85% chance we don't go over this. Small chance we do, but I don't think that we do. It's a good sign if we do. If you're a bear, watch the fuck out if we do. The next swing up will be all-time highs. Hold on. What are the weather windows? Let me just check the weather windows. I just want to make sure I'm not wrong on this. Yeah, it says April and October are the best times to invade. Lasts about 4 weeks. April is extremely foggy, and October has late season typhoons, which hit Taiwan about 6 to 7 times per year. Saying short answer is yes, but when you're talking about a marine invasion, it's less how bad is the weather versus when can we plan on the weather being conducive for long enough to have 50 ships going back and forth and smaller landing vessels not floundering in the shallow rocky water near the coast. So like in April, it's foggy, which does help for invasion. It sucks as the invader because you can stand off as the defender. You can stand off with U.S. ships off in the distance. You can stand off with Taiwanese defense forces, and just pluck them right out of the ocean, right? It's easier as the defender to stand off a military. They need and I agree with that. They need fog, and they need bad weather to assemble, and then they need semi. Not that you can't see through fog, but it still lends itself to more difficulty to defend against an invading force. So I don't think it's conducive right now. I could be wrong in here, and this could be a ace up China's sleeve, but like anything else, I would just I would try to get the Strait of Hormuz open if I was China. Things become more dire for them by June, July. You could crush their economy. It has to do with the storage of oil, and then shutting the pumps. It could reduce capacity for not only reduce the capacity for China's consumption needs, but it brings up who are they paying then for that oil that they don't have? It's us, more than likely. We'll make the money off of that, and we'll have more power too, right? It's not conducive to have those wells down if they need it for warfare. It's in their best interest to have those wells running. I'm looking for a pullback into tomorrow's open now. You see how it's kind of set itself up? Just a warning to you out there. I am looking for, just so you can see it right here. So we've hit this. Do you see it? Let me just make this. So just so you can see this here. So we've hit this target here, right? We don't need to go over it, okay? And you're just looking for a drawdown in here. And we can backtest this, and then we can attack to get over it for the second high. Just so you can see this. That's the up move. We want the down move. One more up and then one more down. We got that nice little clean half-hour trigger crossing up, hourly trigger underneath. Backtest this right here. First backtest half-hour trigger, rock and roll to the upside, okay? So just be aware that we're coming into a backtest right now. We're looking for this cluster. This is the basis for going higher here. Let's watch this right here. And remember, too, that we're in a liquid environment here. We get out of New York cash markets, we can manipulate markets, right? So that was my concern with tomorrow was this backtest in the overnight low volume, you can actually break that cross to the downside. So if you want to get out here, you can. You can always jump back in on a back test tomorrow. Don't need to be long here. Like no requirement that you're long here. If you want to be into Friday, I understand. If you're long from way underneath, you might be fine. Just remember that we're going into a liquid environment here. This is where the bears like to play. They can't make it happen. They'll do it in these environments to mechanically move the market lower. I gave you a contra trade earlier in case this fails, this back test fails overnight. Have a great night. I think we've discussed everything that needs to be discussed right now. If you're a bear, you basically have a window between now and next Wednesday for your manifesto to work out. It's not looking good right now, I'll tell you that. I would have liked to have seen more progress for bears today. You still have more time, but you know, today's Tuesday. I don't mean this Wednesday either. I mean next Wednesday. So you got, 7 days, 5 sessions left. It's enough time to bring us down, but just be aware that, you know, the first chapter of your book is done. And it wasn't as bad as it could have been. So you need more doom. You need something more material than this. What's that? Hold on. I told him, didn't I? The mouse, didn't I tell him? They're not getting over the white line the first time, right? They're going to reject it. They don't listen, dude. I warned them, duder. You take it easy, brother. I'll see you all in the